and try to deal with the areas of natural tension in a more constructive way.
Michael Spence, at home, how does Joe Biden try and, spur support, or at least get the 70 million people that voted for President Trump to trust him, to give them something that is more solid, a path forward? Or is Donald Trump, because he refuses to concede the election, doing that for him?
No, I don't think, my sense of we looked at this fairly carefully. My sense of the Donald Trump supporters are that they're really committed. Now, what they're going to do after, he's no longer in office, it's very difficult to know. But I think that Joe Biden probably, and his team probably understand that you don't convert these people, who A, supported Trump, B, don't trust a wide range of institutions, including, the coastal elites, the media, etc. People like me, academics, so-called experts.
No, not me.
What? No, not you. And so I think, there isn't a quick fix to that. I think what he'll try to do is, rejigger the economy so that the people who have suffered in the past few years in terms of employment and opportunity, have more opportunities and have a better life ahead of them, focus on the young generation and win them over slowly.
Michael Spence, there's a desire for normalcy of too many people, including supporters of President Trump. What does economic normalcy look like at the White House, at the chairman of the Council of President's Council of Economic Advisors or National Economic Advisor? What's your definition or path to normalcy?
It has been, ever since the pandemic started, control of the virus, recovery of the heavily hit sectors, including especially the ones that are large employers, rapid sort of intelligent deployment of a vaccine to vulnerable people, but especially first to the people on the front lines, the medical folks. And normalcy feels like, the usual chaotic situation. But I think it's important to say, Tom and Francine, we're not going to return to something that really feels like normal for a fairly long time. We have had an enormous amount of balance sheet damage. We have a huge increment in debt. And we're going to have low interest rates for a long, long time. So this isn't, by some sort of historical definition, isn't going to feel like normal, once the virus is over. There's lingering effects.
All right, thank you so much. Michael Spence there, Nobel laureate and General Atlantic Senior Advisor. Of course, he stays with us, and we'll talk a bit more what normal looks like. Coming up, an exclusive conversation with Bruno Le Maire for Bloomberg's EU Policy Series. I believe you can actually follow that on the Bloomberg terminal or also online, and you can submit questions directly with our Guy Johnson, who's in charge of bringing that exclusive interview. This is Bloomberg.
really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Hi, I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
It's really a reminder, isn't it?
This is Bloomberg Surveillance. I'm Francine Lackman, London, Tom Keen's in New York. Now, we were having a great conversation with Michael Spence, Nobel laureate and General Atlantic senior advisor. Professor, thank you for joining us. When you look at some of the long-term effects that the pandemic and COVID can actually have on the way we work and on inflation expectations in general, do inflation expectations remain subdued? Does it become, does it continue starting deflationary? Or are we expecting suddenly the economy to actually pick up much more quickly when a vaccine is widely available?
Well, on the vaccine, I think, once it's widely available, it is very reasonable to expect a change in the pattern of this sort of slow and kind of struggling recovery to a relatively quick one. Once people are freed from the fear of going to restaurants, once industries are open for business like airlines, I think you can see, we might see something quite astounding in terms of recovery. And so that's just very good news. And it's not unreasonable to expect that by the second half of next year, we could be there. And there'll be lots of interesting investment opportunities and other things. Longer term, we're seeing several trends. The digital acceleration one you've talked about many times on your show, and it's real. It's enormous. I don't think we're going to go back to the old normal in terms of working relationships. Too many senior leaders in business have announced that that's not going to happen, at least in America and in a number of other places. That has consequences for cities, for real estate, for all kinds of things that are very difficult to sort of see with any precision right now. But as to inflation, honestly, I think even if we get a very rapid recovery, we didn't have much inflationary pressure before. And it looks like every time, we go through a period of sort of relatively accommodative monetary policy, we get a lot of money flowing into the capital markets, into equities, among other things. But there's nothing structural that I or others have been able to see that suggests there's any immediate threat of inflation. That doesn't mean we should fall asleep and assume it's gone away forever, but it doesn't look imminent.
Yeah. But when you say a pretty astounding recovery, is that in how quickly the economy can rebound, or actually in strength?
Both, actually. That's much faster than we've gotten used to in the pandemic economy, because we've all hit the part where we've hit the sectors that are hard to recover, and the vaccine basically takes that constraint away. And then things like pent-up demand. I think we're all kind of fed up with this. So I can imagine, both speed and strength coming is a good forecast.
Michael Spence, this is coming out now. It's unfolding, folks, actually over the last, I'm going to say, hour and 10 minutes of various media reporting, and the Wall Street Journal sums it as does Bloomberg, and we thank our team in the Middle East, Alyssa Odenheimer, particularly on this, where Mr. Netanyahu met with the Crown Prince of Saudi Arabia. I want to make clear again, folks, this is news sources, I guess, saying this meeting occurred yesterday. Michael Spence, these are the jump conditions, whether diplomacy or economics and finance, that change regimes. Are we at a point now where we could be stunningly surprised by diplomatic moves that are considered to be extremely favorable?
Yes. It's a distinct possibility. I'm no expert on the Middle East, but that there are a number of things that have happened in the Middle East, discussions between Israel and the United Arab Emirates and some other things that could change the landscape over there, and that has geopolitical implications. But I don't think, at least my personal opinion, is that the world that we were living before, in the pandemic before this, with a rising Asia, with Asia recovering faster, with tensions between the West and China rising, very evident, in surveys that the Pew Foundation and others do. That kind of normal that we were starting to get used to, I think, will be with us even after the recovery.
And a wonderful overview here. Michael Spence, thank you so much for joining us here on these political times. We speak to truly one of our best and a Nobel laureate, and with General Atlantic as well. I do want to point out, we see continued dollar weakness. It's really quite extraordinary. Is it a plunge in the dollar? That maybe takes it too far, but nevertheless, it's been an abrupt decline here in the last hour, and I am speculating that maybe it has to do with that set of headlines of Mr. Netanyahu meeting with the Crown Prince overnight. We will see. Jan Hatzi is coming up in the 10 o'clock hour. That will be on the American economy. And of course, this as we move to a December 16th Fed meeting. This is Bloomberg. Good morning.
Particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
Do you think the risk given this kind of data now lies to the downside for those forecasts even further?
I don't think so. I think that we are all aware of the current situation. We have decided a lockdown for the month of November for the sake of improving the health situation in France. And I think it was the right decision because we have been able, with President Macron and Prime Minister Jean Castex, to decelerate the situation as far as the virus is concerned. And that's good news for all of us. Of course, those decisions have a very important impact on some parts of the French economy. I mean, especially the services. And we have to be all aware that the services, I mean, especially restaurants, hotels, bars, and some of the activities linked to the services sector have been really very much hit by this situation and by the crisis. That's why we're thinking of some more support to those sectors for helping them to go through this very difficult period. But if you are looking at other parts of the French economy, they are doing well. And I think that we should be all aware of that very constructed situation where you have some sectors really severely hit by the crisis, I mean the services, hotel, restaurants, and others that are doing well. At the end, the global situation of the French economy should be a recession of
happening live as we speak, a conversation with Bruno Le Maire, the French Minister of Finance and Economy, talking to our Guy Johnson. He was just talking as part of the Bloomberg EU policy series, and he's, of course, talking about some of the PMI figures and some of the hope out there. If you look at global stocks that are rallying, oil also up on this vaccine progress. This is Bloomberg.
Können Sie einmal noch ganz kurz zu uns kommen? Ganz kurz.
Davor stellen?
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
There has to be none. I frankly do think it's time to, well, it was past time to start a transition, to at least cooperate with the transition. I'd rather have a president that has more than one day to prepare should Joe Biden, end up winning this.
The messaging this weekend of Republicans, including a gentleman from North Dakota, on what we're doing and how we transition. Transition makes the eyes glaze over. It would be good to speak to someone who actually knows what they're talking about. That would be the gentleman from Virginia, our former ambassador to Switzerland and Liechtenstein, Lieutenant Governor of Virginia, somebody wired into these processes. Don, thrilled you're with us, and I want to go into the nitty-gritty. You did this years ago for other presidents. Your chief of staff is wandering over to help out now on Pentagon matters. What does the public like me, what do we not understand about the day-to-day nitty-gritty of transition?
Well, the hard part is that we're going to be 11 weeks behind. When I did it for the Department of Commerce 12 years ago, within a week, we were in the Department of Commerce. The George Bush people were terrific. In virtually every one of the different agencies and offices and bureaus, they opened up and they talked to us about what their major challenges were moving forward, where their problems were, what they thought we should focus on. We were able to put together an agenda to let the president hit the ground running. That's not going to happen, at least not as well as it could now.
I mean, it's not going to happen as well as it could, but then you catch up, I guess. Is the catch up about the major names such as Mr. Blinken, or is the catch up about all the people underneath, the ambassadors, et cetera? How does that actually work? I mean, are you calling every day, begging them to take 3 of your constituents?
No, I'm not begging, but I am sending resumes and trying to vouch for people's abilities. I think that the personnel part is actually going to go pretty smoothly because you don't rely on the wisdom or the input from the Trump bureaucracy on an Anthony Blinken or a Michelle Flournoy or the assistant secretaries and the like. Where you're missing is the policy stuff. What's actually gone on within fish and wildlife or defense procurement that we don't know about because it's buried in the bureaucracy. That's what we're going to have to do lots of catch up starting January 21st.
Congressman, good morning. When you look at, if the transition is not in place or if the right forms haven't been signed in 2-3 weeks, should Joe Biden's team actually do any legal recourse? What's the right avenue for that?
Yeah, I think ultimately we may have to go to the courts. I think the president-elect's been incredibly patient right now, trying to let the Trump people absorb the fact that Donald Trump has lost and Joe Biden has won. It will be interesting to see whether the head of the GSA shows up in Congress today. She was requested, quote unquote, to come explain why she's failed to ascertain. And she'll be facing some pretty tough questioners if she shows up. But ultimately there are legal sanctions. I'm not a lawyer, but there's a writ of mandamus that can require public officials to do their duty, which could be filed. But also, I think we're 2 weeks and a day away from all the states having to certify their electors, and then it should be pretty clear.
Congressman, the transition is a bit like plumbing. You don't really think about it until something goes wrong with it. Do the American people realize what's going on?
I don't think so. And it was going to be a weird transition anyway because of the coronavirus. Again, 12 years ago, we had our own office down the hall from the Secretary of Commerce. This time, everything's being done by Zoom and WebEx and the like. So it's a handicap, but it in no way compares to, I think, the promise of the future having Joe Biden and Kamala Harris as president or vice president.
Don, your district is a fancy district in Virginia. I mean, you're buttressed right up against Washington and all that. Do your constituents, Republican and Democrat, do they care about our debt and our deficit, or is it just out of range, out of eyesight, out of mind?
I think everyone cares in the middle term and long term, but it's been encouraging that people across the political spectrum have realized that we cannot rebuild our economy until we get the virus under control, and that there are, 30 million people unemployed. A huge number of people have been unemployed for more than 26 weeks or 39 weeks. And there's no unemployment insurance bump. There's no direct check. People are really, really hurting. So I think people are willing to spend in the short run to make sure that we take care of our fellow citizens. And then down the road, of course, as a Democrat, my great fear is all of our Republicans who've gone along with, I think, responsible spending are suddenly becoming huge deficit hawks once Joe Biden is president.
Well, I guess that's as everybody jockeys for 2022. Congressman Beyer, I look at the idea of a stimulus. Gregory Vallier publishing for AGF this morning, making clear a McConnell-Biden stimulus of sort before the inauguration could be possible. Do you agree that we could be optimistic about December stimulus?
I am optimistic. Poor wonderful Nancy Pelosi has worked with Steve Mnuchin for months to try to get agreement. And when they've got agreement between the House and the White House, McConnell has squashed it. What may be changing over the weekend is the president-elect, Joe Biden, saying he would push for a smaller stimulus, say a $500 billion one, just to get us through. And I think that would be enough for, a Nancy Pelosi and a Chuck Schumer to say, look, we'll do what our next president wants us to do.
Congressman,
so I'm
how
more
much of a
optimistic
stimulus
than I was
do the
3
American
days
people
ago.
need right now? What's the amount of stimulus needed?
Well, the amount needed, I think, especially to make up what state and local governments have lost, has got to be north of $1 trillion. But let's remember that we'll have a new president in 10, 11 weeks, 9 weeks. So maybe we need something short term just to get us through. Because the people that are hurting now, not after January 20th and 21st.
Don Beyer, thank you so much. Way too early in the morning for you. He's transitioning to a better round of sleep if he's not on with Bloomberg Surveillance. He is the congressman for the 8th District in Virginia, buttressed right, including Arlington Cemetery, buttressed right up against Arlington and then to the south in the west of the Potomac. Right now in New York City with our First Word News, here's Ritika Gupta.
Thanks, Tom. Another vaccine has shown promise in the fight against the coronavirus. The shot developed by the University of Oxford and AstraZeneca prevented a majority of people from getting the disease. It stopped an average of 70% of participants from falling ill. That's less than vaccines from Pfizer and Moderna. However, effectiveness rose to 90% for one of two dosing regimes. A former national security advisor to Joe Biden is expected to be named Secretary of State. The announcement about Anthony Blinken is likely tomorrow. Blinken also served as Deputy Secretary of State during the Obama administration. Plus, former Hillary Clinton aide Jake Sullivan is likely to be named Biden's national security advisor. President Trump's campaign has disavowed a member of its post-election legal team. Sidney Powell has pushed some of the most extreme conspiracy theories around the vote. A statement from the campaign said that Powell is not a member of the Trump legal team, even though the president had said that she was. And Secretary of State Mike Pompeo says the U.S. has withdrawn from the Open Skies Agreement because Russia isn't complying. The treaty allows countries to fly unarmed reconnaissance flights over each other's territory. It's designed to reduce the risk of war. Democratic Senator Bob Menendez called it the move reckless. He urged the incoming Biden administration to reverse the decision. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine.
Thank you so much. Happening right now, Ritika, Bruno Le Maire, the French Minister of Finance and Economy, speaking in an exclusive conversation with our Guy Johnson. They're talking about extra support needed, especially for restaurateurs and bars. They're talking about COVID-19, the effect of a vaccine, and how quickly they can actually reopen. This is the very latest, of course, on this conversation between Guy Johnson and Bruno Le Maire. We'll have plenty more on that shortly. Let's listen in.
That the interest rates will remain at the same level over the next decade. You know the sentence by Shakespeare: if you can look into the seeds of time and say which grain will grow and which will not, speak then to me. If you can say to me, well, the interest rates will never grow, then that's fine. I can have a very high level of public debt for the next 5 decades. But since I do not have any guarantee for the long term, I think that's a responsible approach that we have with President Macron and Prime Minister Jean Castex is now to invest to protect our economy and to have a quick economic recovery. And then in a second step, think about the best ways of reducing the level of French public debt.
Minister, are you suggesting that French debt is unsustainable?
Better than expected, not only in terms of job creation, but also a sharp fall in the unemployment rate consistent with higher labor force participation. That's really good news.
Overall, the gain was solid, but even while this is a very robust pace of job gains, it's a lot slower than it has been in the summer months.
Great that we saw the job gains we did, but they still are diminished from what they were, of course, back in April and May. And the scarring, the sort of wounds that were created by COVID are beginning to fester.
I would caution people to look at the top line number because I don't think it tells the entire story. Employment relative to population is still well below where we were pre-crisis, and that's because I think that we're going to have some lasting damage.
Depending on what you look at, jobs creation or the unemployment rate, you have different views as to whether the improvement in the labor force is keeping up or slowing down.
With the advances we are witnessing in the COVID-19 vaccine development, our top priority is to ensure affordable and equitable access to the vaccine and diagnostic tools for all.
Substantial financial gaps still need to be addressed, and they will require innovative financing tools and pathways and an active involvement of the private sector.
Und dabei kann die G20 wichtiger.
If we stand together across the globe, we can control and overcome the virus and its impact. It is worth redoubling our efforts to achieve this.
Qu'avant la fin de l'année, un vaccin sera disponible.
We can reasonably expect that before the end of the year, a vaccine will be available. But another battle, a harder one, needs to be fought: universal access.
The UK has committed to equitable global access for any vaccine, and I would like to see the G20 nations collectively step up and support that effort.
Korea will work in partnership with the international community to put a complete end to the COVID-19 pandemic. We will marshal the forces to develop and distribute vaccines and treatments.
Leaders of the world's biggest economies pushing for equality in the race to vaccinate people against coronavirus. Now, we had some encouraging news out of AstraZeneca this morning. And as we continue to track the virus, Bloomberg has developed this unique partnership with the leading authority on COVID-19. And every day we bring you experts from Johns Hopkins to try and figure out exactly what the next hurdle for some of these vaccines and treatments is. Coming up shortly is Joshua Sharfstein from Johns Hopkins. Dr. Sharfstein, thank you for joining us. When you look at the encouraging news from AstraZeneca and Oxford. There are many questions about, the number of freezing, whether the 90% is different to the 70%, depending on what kind of dose you give. Overall, are we just in a much, much, much better place than we were 3 weeks ago?
We are. We're in a much, much better place than we were 3 weeks ago because we have evidence released that gives us hope that we have 3 vaccines against this terrible illness. Now the process is for that data to be shared publicly, for the regulatory authorities to look at it in the United States. There will be independent reviewers coming in, independent advisors who will help the agency sort through it. And I think each step will give us hopefully more confidence in the results so that we'll see much higher levels of confidence in vaccination by the time the vaccine doses are rolling out.
Joshua, the elephant in the room was a president of the United States who's playing golf. He gave lip service to the G20. I understand he's lame duck, etc. Okay, we're going to get that behind us. Day one, what does the vaccine team have to do for President Biden? What's the first to do they have to do to get us in gear?
I understand why you're asking that question, but it's a hard one right now because before he takes office, we're going to understand the regulatory status, whether these data hold up. So obviously what happens on day one is going to depend a lot on that. By day one, we're going to know whether we have control over this completely out of control outbreak right now in the United States. And whether we have it under control is going to matter a lot for day one. Actually, I think right now the new team has to be quite flexible because we have 2 months and a lot can happen in 2 months. So I really can't answer the question.
So, Joshua, what are the questions that you would be asking of these vaccines? We're in a much better place than we were 3-4 weeks ago. There's still many unanswered questions. How many people want to get vaccinated? Whether once you get the vaccine, you spread the disease. What's the number, 1 or 2 things that you want to find out?
Well, I mean, the core is how effective are these vaccines and how safe are they? And I think that, it's great to hear from the companies, the top line results, but there are a lot of other results and data that have to be shared. We want to know how well the vaccine works in different populations, particularly in older people. We want to understand the safety profile so people can really expect the side effects, the modest side effects that might happen. And we want to understand, the key elements of how to keep the vaccine active during the transport cycle so people can really plan for major vaccination campaigns. There's a lot that has to happen. And, in the United States, I'm particularly concerned that the states and localities have not gotten any extra funding to help with the largest vaccine delivery project that we've ever had. And recently, they've been submitting plans which assume that they're going to get funding. It is just well past time for Congress and the president to provide funding to states. This is another thing that has to happen in the next couple months. It's too late, in my opinion, to wait for inauguration.
Okay, how quickly can we reach full herd immunity? What are the numbers that we need to obtain across specific countries to make sure that it's safe?
So what we want to see is, the community transmissions declining over time. So that's why, certainly now, because we're having this huge outbreak, but even into vaccination, people still need to maintain distance and wear masks. As the number of people getting vaccinated and are protected rises, then we'll see even greater falls in community transmission. And then we're going to have to, really get a sense for how many people have to be vaccinated in order to keep that number really low. And of course, that'll intersect for a period with the strength of the public health system. So it won't be one place, I think one number, it's this percentage, right at the beginning. I think we're not going to know. And it's going to depend on vigilance and a good public health response. Over time, we'll see, how high it is. And I think depending on the models, people are thinking it's somewhere in the 70 to 80%, but you don't really know until you've done
it. Joshua, given what we know, and I know, we're waiting peer review and things like that, but is it clear that Moderna, Pfizer have a stronger vaccine than AstraZeneca, or is that still in play?
Yeah, I think I would prefer to hear from people who are independent, can look at the data themselves. That's what the FDA does, and give the best sense of it. So I'm withholding judgment myself until I hear from them.
Thank you so much for the update. Joshua Sharfstein there of Johns Hopkins, and be sure to check out VRUS Go on the Bloomberg for the very latest information. You can also tune in every day for our expert conversations with Johns Hopkins to track COVID-19. Now, coming up on Bloomberg Radio, Doug Hirsch, GoodRx co-chief executive. That's coming up at 5:30 p.m. in New York, 10:30 p.m. in London, and this is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance. I'm Rishka Gupta with your Bloomberg Business Flash. The richest man in the UK is teaming up with Hyundai to give hydrogen fuel cells vehicles a boost. Jim Ratcliffe's INEOS Group will explore opportunities to produce and supply hydrogen to the Korean automaker. Hyundai has been making fuel cell vehicles in low volume since 2013. Ratcliffe may also use Hyundai's fuel cell system in an SUV that INEOS plans to bring to market. A United Nations panel says that Carlos Ghosn's detention for almost 130 days in a Japanese jail violated his human rights. The panel called the former Nissan chairman's 4 arrests in a row fundamentally unfair. Ghosn made a daring escape from Japan and now lives in Lebanon. The electric vehicle startup, backed by Amazon, Ford, and T. Rowe Price, is running into supply constraints and a backlog for its debut electric pickup. Bloomberg's Ed Ludlow spoke with the CEO of Rivian.
Currently, with the orders we have, people will be in queue far longer than we'd like. So we had originally planned on a ramp up that had, excess demand, massive supply constraints through 2023. We're now in the process of working to accelerate launch and accelerate ramp up so that we can give customers their vehicles more quickly.
The largest retailer of music instruments and equipment in the U.S. has filed for bankruptcy. The filing will let Guitar Center stay in business while it figures out a restructuring plan for its debts. The bankruptcy plan calls for $165 million in new equity financing. Guitar Center expects to exit the court process by the end of the year. Rebalancing flows may lead to an exodus of around $300 billion from global stocks by the end of the year. That's according to JP Morgan. The bank says that large multi-asset investors may need to rotate money into bonds from stocks after strong equity performance this month. And that's your latest Bloomberg Business Flash. Francine?
Thank you so much, Rutika. Now, a quick look at the markets. Global stocks, equity futures, oil rising on optimism over a COVID-19 vaccine. The news came earlier on from AstraZeneca. Now, it did say that it's prevented illness in most people. The U.S. is also, we understand, moving closer to mass immunization. If you look at energy and banking, shares are leading the markets higher in Europe. I'm also looking at Repsol, the Spanish oil producer, jumping some 5.5% following a report that it may move to an all-cash dividend. And then Crédit Agricole gaining some 2.8% after agreeing to buy an Italian bank. A couple of the other things I'm watching, first is pound. Now, Tom was pretty excited about what was happening to pound, rallying the most amongst major peers. There are signs that the UK and the EU are close to agreeing on a trade deal. That's the latest progress, and the development of a coronavirus vaccine also seems to be adding optimism over prospects for sterling. So sterling rising to around 1.3381. It did extend an advance that sent the currency to the highest level since early September. And then I also went to Turkish lira. If you look at the Turkish currency, it's falling the most amongst emerging market currencies as locals seem to be taking advantage of recent lira strength to buy dollars. So there you go. Turkish lira, 7.7709. Now, coming up, more Bloomberg surveillance, but this time simulcast on radio and on TV. They'll talk U.S. politics, they'll talk Europe, Brexit, and data. This is Bloomberg.
side to understand the sensitivities of the other.
Former U.S. Secretary of State Henry Kissinger said the incoming Biden administration should move quickly to restore lines of communication with China that frayed during the Trump years, or risk a crisis that could escalate into military conflict.
Unless there is some basis for some cooperative action, the world will slide into a catastrophe comparable to World War I, with a technology that is even more difficult to control than the technology of the period then.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Scenario for markets would be if the unemployment rate in November will begin to go higher.
Equity volatility and equity uncertainty still remains elevated.
In the very short term, we are very much due for a tough time.
If we take a longer term perspective, we have a pretty supportive market.
Once those vaccines hit next year, we're going to have a big year, 6% growth.
The Fed has been quite clear that they expect the federal government to hopefully provide more income support.
What they really want is for Congress to do its job, and that's not happening.
Even in supposedly the good places know where there is reflation, central banks are worried.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
From New York and London for our audience worldwide, good morning, good morning. This is Bloomberg Surveillance live on Bloomberg TV and radio. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. Tom Keene, it is Monday morning, which means one thing apparently, vaccine news.
Well, vaccine news, it's the way it's been, and we'll get to the expert Sam Vasili here in a moment. I take the point, John, that it's moving markets, but there's a lot of other stuff out there percolating. The dollar strength really has my attention, and I would go to the news released in the 5 o'clock U.S. hour of the reports that Mr. Netanyahu met with the Crown Prince of Saudi Arabia. These are not speculation, folks, but they really haven't been vetted out by the Israeli or the Saudi government yet. But I really wonder, John, if that helped a little bit as well.
I don't know about that, Tom. I think this morning very much on the vaccine front and that cyclical tilt in equities, small caps outperforming, NASDAQ underperforming. Dollar weakness, Tom. Can we touch on that just for a little bit more? The dollar taking out the lows from September on the DXY.
Well, on the DXY, which is a major trading partners, we'll see how BBDX does and the others. But, John, what I would notice something as important as a Mexican peso, folks, 24, 22, 27 grim, comes through, hits 20 and breaches 20 this morning. John, that's just one little snapshot of the complexity of EM pairs doing well, the jumble of EM pairs doing well.
From EM to DM, in DM, everything's stronger against the US dollar in the bond market. Yields up a couple of basis points. Lisa, good morning to you.
Good morning.
A little bit of supply coming through the week.
We're going to be getting $197 billion of debt of 2-year, 5-year, and 7-year notes starting today. 1 p.m., $57 billion of 5-year notes. I'm very curious. There's this tension, John. I don't know if you did this reading over the weekend. I'm sure you did, about the inflation outlook in the near term and how there is a real divergence in views of whether we're going to overshoot here with the Fed's target of 2% or undershoot. Morgan Stanley seeing a pretty significant overshoot. I'm looking for that in the bond market today and throughout the week. Also today, Michigan and Pennsylvania are likely to certify the election results. I find this interesting because the election has moved on if you look at markets, and yet there still is this tension. At what point will the Republican pressure come to enough of a head to get President Trump to concede or at least get that transition crew to give some information to the Biden administration? Also today, the White House may issue a list of 89 companies denied access to U.S. tech exports. These are Chinese companies. This is what the U.S. has threatened to do. Again, this goes to this theory, John. How much is the Trump administration going to try to disrupt or set a course for Biden that's going to be difficult for him to diverge from? And how much will this complicate the efforts to try to get on some sort of track to recover on the other side?
How much daylight will there be between the two administrations when it comes to China? Lisa, it's a really good point. We'll touch on the prospective changes in the cabinet coming up in the next 4 years. We might get some details on that in the next 24 hours. I want to touch on the markets very quickly this Monday morning. Good morning to you all. Just whip through things quickly. There is a cyclical tilt again to this market. Europe with a lift, small caps with a lift, big tech underperforming. You know the story. Every Monday we've got used to this now. Up 18 on the S&P. Euro dollar, though, here's the move. It's the move you've been waiting for. It's been absent. Euro dollar reclaiming a 119 handle. And the DXY, the dollar index, heavily weighted towards the single currency, taking breaking out the lows on a closing basis from early September. We'll talk about that through the programme. In a Treasury market, Treasuries lower, softer, yields higher. We head north by 2 basis points to 0.8488%. And Tom Keane, there's the move in the crude market. I think we've got the post-COVID shock highs in the crude market on WTI and Brent.
46 Brent crude when I walked in the door this morning, 45.49 right now. John, I just looked at the Bloomberg Dollar Index, which frankly, folks, I think is better math than the acclaimed DXY. And John, without question, with EM strength, BBDXY breaks out to new dollar weakness.
Multi-year lows on the BBDXY. We've got to start the conversation this morning where we've started it every single Monday for the previous 2 weeks.
Every day he's on.
Another Monday morning. We're going to do it with Sam Fazeli, Bloomberg Intelligence. Sam gets to join us when we get good news, and I think that's very, very good news. Sam, this morning we heard from AstraZeneca, and I have to say, this one was harder to read than what we heard from Moderna and what we heard from Pfizer. When you get 3 different efficacy numbers thrown out there, can you walk us through what you're focused on and what we should be focused on too?
Yeah, good morning, John. And yes, it's good news. Not as good as what we've had in the 2 previous Mondays, but it's still good news. I'd have to say that it always worries me a little bit when I don't want to call it data dredging, but you start getting these subgroups thrown out in the press release, etc. To me, I'm going to read this as a 70% efficacy vaccine until I see the details of those group that had the 90% and the group that had the 62%. You can't ignore the 62% and just run with 90%. So we have to understand why there was a difference. And there isn't enough information in there for me to figure that out. So we're going to run with 70%. But that's still not bad. Remember, this is what we were looking for when we first got to these vaccines.
Sam, Deutsche Bank moments ago put out a chart through George Saravellos of herd immunity, the different nations, as they try to get to this important concept of there's enough people sick where maybe the virus ebbs away, the pandemic ebbs away. What's the Fazeli herd immunity chart look like? How distant is it?
Yeah, so I've tried to draw that chart many times, and every time I do it, I find far too many variables to put in there.
Totally agree.
The toughest ones, Tom, is how many people actually go and line up and take the vaccine. So I hope that knowing that we're always far too optimistic, and a lot of people are saying 2Q, let's say second half.
Sam, short and sweet. Great to catch up, sir. Hopefully we can do this again on Monday with even more good news. Sam Fazeli of Bloomberg Intelligence this Monday morning. I want to start a market conversation with Amy Wu. Amy Wu Silverman, RBC Capital Markets equity derivative strategist. Amy Wu Silverman, a word that gets thrown around a lot in conversations on Wall Street is the word complacency. In your world, do you see signs of the C word?
A little bit, yes. And, we've heard this narrative a lot now that, the market is just going to look through how bad the COVID rates are. Obviously, every Monday we get good news from the vaccine that only justifies that camp. And then, for me as a derivatives person, I say, well, what is the second order effect that's happening with derivatives? Are people actually hedging under the hood? Are they nervous? The short answer is no. You don't see it priced into any of the upcoming dates that we have for election confirmation. You don't see it in hedging demand. Short and sweet as well, the options market also believes we're going to look through this into next year.
So meanwhile, on the technical front, Amy, just to stay there was a note out over the weekend from your colleague, Nicolas Panaglertoglu of JP Morgan, predicting that there will be $160 billion of selling of equities as a number of pensions and big investors rotate into and rebalance into that 60-40 portfolio. Do you see that as a possible tension heading into year end?
So it's interesting you bring that up. So, look, pension rebalancing is sort of a irregular occurrence. And while that's something that is happening, one thing that we are also tracking is what is happening in the CFTC positioning data. This group of investors, basically real money as well as pensions, if you started sort of at the time of the pandemic, was extremely underinvested, and starting essentially September, we've seen them come into this market, and what are they doing? They're actually buying value and selling tech. And the other part of this is what I think is interesting is this is sort of the opposite of what we've seen from the big retail camp that's driven a lot of the exuberance in tech. I think that there's still a lot of money on the sidelines that will come into value, but at the same time, we haven't seen retail step up the way they did for tech, and I wonder if that could still provide a headwind as well.
Amy, this is way too sophisticated for early Monday morning. I mean, my brain is freezing over here. This is a really smart conversation and important, folks. Amy, this comes in waves. It's a Brownian function, which is a bunch of physics talk for it comes in waves. We're going to get this move, and then we're going to get an ebb back. What will you try to observe when tech does a little better, value cyclical eases off? What will you try to look for to see which way it cuts into the future?
Yeah, I think my last stochastics class was like 20 years ago, but look.
Mine was this weekend. It was over the Third Manhattan. Continue.
There you go. There are a couple of things that we look for in terms of stats from options. The one that's really key is skew. So essentially the imbalance that we're going to see between the put side, so the bearish side, versus the call side. Now, the reason this matters so much is this was one of the primary drivers we saw that really kept tech going, in particular in August, both for technical reasons, because the options market itself was actually driving the market, but also for sentiment reasons. If we see this starting to pick up in the recovery names, which we haven't really yet, I think that's a very, very strong sign that you're going to get an even larger inflection to this value side.
Amy, the only skew in the key now is should we wet brine or dry brine the turkey. So when we skew and we make a decision, the elephant in the room are people like SoftBank and the other speculations of big money making big decisions. Do they get in the way of a rational reassessment here, or did they have their act 3 months ago?
Yeah, so look, those trades which have been in the market have obviously, a lot of them have been rolled off and others have just not come in the money. There's always a possibility they get reloaded just because that's a very, very large pool of money. I have no idea, obviously, if that's going to happen specifically for SoftBank. But the other strong driver of that is retail, possibly more than SoftBank was, although SoftBank is the one that gets written up the most. And so if that happens, you will start to see that skew go inverted, so go negative the way it continues to go for something like Tesla.
So just to tie this all together, Amy, I'm wondering if, given all these cross currents that you're talking about, it seems like there isn't necessarily going to be the big pullback that some people who've come on this show are predicting due to the fact that we are seeing a surge in virus cases. Do you think that is accurate, that basically given all of the uncertainty and given the fact that you're not seeing a big short position or anything in the derivatives market that would suggest turmoil, it's just going to be buy?
Yeah, this is a question I think about a lot. And I think one thing to say is, look, if there's a very sharp inflection, as we have seen there is between value and tech, the issue is this is all going on under the hood, right? So you can have value do extraordinarily well and tech go down, but tech is such a large portion of the index that your overall index levels may just remain flat, even if you have very strong recovery names going up. And I looked back 4 years to 2016. I don't know if you guys remember that something very similar happened when Trump became the president. You saw a lot of under the hood movement with financials and industrial and tech, and the overall index basically, kind of wafted along.
Amy, great to catch up with you. Amy Wu-Silverman there of RBC Capital Markets. Thank you. This morning, if you're just tuning in, some more promising news on a vaccine front from AstraZeneca gives this market a little bit more of a lift, up 16 points, Tom, on the S&P 500. We advance 0.5%.
Well, we do. It's a nice lift up. There's no question about that. Futures up 16. It's a beautiful world, John. There's no question. Renminbi 6.56 holds on as well. John, do you see what I'm wearing today? Do you like the glow?
What are you wearing?
I mean, for Bloomberg Radio, it's really they can tell on Bloomberg.
It's a bow tie.
I'm out in blue. I'm out in Tots blue.
Blue and white.
You see that?
Okay.
That's Tots.
Tottenham blue.
Were you happy with the result?
I thought it was just wonderful. I thought, John, that the other team, they didn't kick the ball from far out enough. They would have done better if they kicked the ball farther out.
Astute analysis. You should write a column on a Monday.
I'm destined.
I would read that. I'm sure a lot of other people would too.
NBC Sports is just all over me.
Kick the ball harder.
I'm sure if the team at NBC Sports are tuning in this morning, they are quaking in their boots, worried about
I'm going to be on the Zoom thing with Vet Bill.
For the coming season. Coming up on the program, Carmen Reinhardt, World Bank Chief Economist, and Vincent Reinhardt, Standish Mellon, Asset Management Chief Economist. What a power couple. Coming up very shortly, right here on Bloomberg Surveillance.
With the First Word News, I'm Ritika Gupta. Another promising development in the fight to end the coronavirus pandemic. A vaccine developed by the University of Oxford and AstraZeneca prevented a majority of people in a large trial from getting the disease. It stopped an average of 70% from falling ill. That's below the high bar set by Pfizer and Moderna. But effectiveness did rise to 90% for one of two dosing regimes. Joe Biden plans to name longtime advisor Anthony Blinken as Secretary of State. When Biden was vice president, Blinken served as his national security advisor and later Deputy Secretary of State. Bloomberg's learned that former Hillary Clinton aide Jake Sullivan is likely to be named national security advisor. The Trump administration reportedly will ban tech exports to 89 Chinese aerospace and other companies. Reuters says the companies have ties to the Chinese military. It's a move that could escalate tensions as the Biden administration prepares to take over. And Foxconn will finally start mass production at a Wisconsin plant championed by President Trump. Bloomberg has learned the company plans to assemble key components for Google servers at the factory. The facility was unveiled to much fanfare in 2018, but it's succumbed to delays and switched directions several times after local officials cut subsidies. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Unemployment insurance runs out for many people at the end of the year before Joe Biden takes office. The eviction moratorium runs out at the end of the year before Joe Biden takes office. So if that and other problems are going to be fixed, they have to be fixed right now under the Trump presidency with the congressional lineup we have right now.
Ronald Klain there, President-elect Biden, Chief of Staff on ABC this week. We have problems right now. That's the message. From London and New York this morning, good morning, alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro. Here's the Monday morning price action for you. In the equity market, a lift, the cyclical tilt, small caps outperform. Europe doing nicely. You know the story. The S&P up another 17 points. We add 0.5% to the benchmark in the United States. In the bond market, yields higher by 2 or 3 basis points. Lisa ran you through some of the Treasury supply you can expect today and through the week. And finally, in the FX market, euro dollar, very briefly reclaiming a 119 handle at 118.99. We take out the lows of the year on the dollar index, the DXY, on a closing basis. But as you point out, Tom, the BBDXY, the more broadly weighted dollar index, which tilts away from the euro a little bit more and more towards the likes of the offshore Chinese currency and the Mexican peso as well. That's at a multi-year low. So that dollar weakness that people were looking for is starting to flush through this market a little bit more.
Well, it's there right now. There's no question. And, we're seeing it in all sorts of pairs. I should note the Turkish lira goes the other way today. Finally, some weakness off the massive Erdogan shift that we saw last week. Right now, on the shifts of Washington, on the calendar forward of this Thanksgiving week, we speak with Kevin Cirilli, our Bloomberg chief Washington correspondent. Kevin, we saw a 37-page ruling by a federal judge in Pennsylvania. There's no question the great desire of this president of drama is, I'm going to the Supreme Court. Is Donald Trump going to the Supreme Court?
Well, right now, there's just little more than words that are being spoken. Pennsylvania is expected to certify their results. Michigan could follow suit. You've got Rudy Giuliani distancing himself and saying that Sidney Powell is not connected to the president's legal team. There doesn't seem, based upon conversations that I had, to be a clear, coherent legal strategy in terms of getting these results overturned. Meanwhile, Republicans now coming out one by one and urging the president to start these transition briefings. If it's not Senator Pat Toomey of Pennsylvania, it's Senator Kevin Cramer, Lisa Murkowski, and the list goes on.
Kevin, I look at this, and I'm going to be very direct here. In Wisconsin, it seems like a ballot choice of looking at Milwaukee, which is very Democratic and very black, and looking at Madison, which is very Badger and very to the left of Elizabeth Warren. What is the president thinking going after Wisconsin this late in the game?
It's unclear, and in fact, you mentioned Wisconsin. You mentioned Wisconsin, and you look at Pennsylvania. Just hop across the Commodore Barry Bridge to New Jersey, where Chris Christie has called this a quote unquote national embarrassment. And so again, it's just high profile Republicans who are now urging there to be some type of transition briefings pertaining to national security and the coronavirus to start taking place.
Want to see the transition take place? A lot of people do, Kevin. This government is already planning the future cabinet. So let's talk about President-elect Joe Biden's future cabinet. What are you hearing at the moment?
Well, Tony Blinken for Secretary of State. This matches with what we've been hearing for quite some time here at Bloomberg. When I spoke with Tony Blinken several months ago over the summer, I asked him about how he would connect U.S. and China relations. And what he told me, Jonathan, is that he would try to restore U.S. multilateralism in the sense of getting Western allies on board in Europe to be able to speak from the same geopolitical playbook and pressuring China to encourage good behavior. Beyond the State Department, if you look at some of the names that we're hearing, for Treasury Secretary Lael Bernard is someone who comes top of the list based upon conversations that I've been having here over the last few weeks in Washington, D.C.
Kevin, Tony Blinken is a centrist, and so far the people who have been tapped by the Biden camp tend to skew more toward the center. How much pushback is there from the Democratic progressive wing?
I don't, based upon conversations that I've had, Lisa, with progressives over the past couple of weeks, they're less likely to pressure State Department choices than they are for Labor Secretary or, dare I say, Treasury Secretary or Commerce and whatnot. Look, there's going to be a clear opportunity for progressives to try to make sure that they have some impact, not just on those agencies that I listed, but also maybe even energy. And I think that that's where the fight's going to play out. But without question, if you even look at some of the previous campaign statements of people like Senator Elizabeth Warren and Bernie Sanders, all of them spoke critically of China. And Tony Blinken has a history of really not just aggressive rhetoric, but really trying to hold China accountable and forming a broader coalition to do so.
In the meantime, there's a lot of focus on Mitch McConnell and his role here, Senate Majority Leader. He has not come out. He's one of the Republicans that has not come out and said President Trump should just concede, begin the transition. He also is one of the main obstacles to President-elect Biden getting through any kind of infrastructure plan or currently that stopgap measure. He's one of the big architects of a potential fiscal support bill in the near term. What's his game plan? What's his goal right now?
Well, that right there, Lisa, I think is the key point here, because in terms of a centrist check on a Biden administration, it runs through Senate Majority Leader Mitch McConnell. In the immediate short term, December 11th deadline to keep the government funded, to provide some continuing resolution. And honestly, I think if you look beyond the headlines of what you saw Secretary Mnuchin do in trying to pressure the Fed to give back some of their money with some of the lending facilities, I think that there's a broader conversation happening behind the scenes based upon aides that I talked to who say that they feel that Leader McConnell is making sure that the money is going to the right places. That has already been allocated and passed by Congress.
Kevin, there's a scene in the wonderful Peter Pan movie with Dustin Hoffman where he says bad form. It seems like everybody out in the Washington zeitgeist is looking at this president in his golf cart and saying bad form. Who's going to advise this guy, to use the phrase of another generation, to shape up?
I'd need some pixie dust to try to predict how the next couple of weeks are going to go. But I think, as I've said, based upon my reporting, I think that President Trump is trying to play a long game and trying to figure out what his long-term strategy is in terms of being a kingmaker for the Republican Party in 2022 and 2024.
Kevin, great to catch up. As always, Kevin Cerulli there, Bloomberg Chief Washington correspondent down in D.C. The prospect of Janet Yellen going from the Fed to the Treasury, What do we think about that, guys? Tom?
It's a good question, John. I put a little bit of thought into it other than this, and I will say this with great force. In my conversation with her, John, a couple of weeks ago at Brookings Institution, she was razor sharp. She was, John, if she wasn't, I'd say so. She was totally on her game.
Oh, I don't even think that's been questioned. No. Undoubtedly unqualified for this role, Lisa. It's the optics of it. From Fed to Treasury, Treasury to Fed, hand in hand, going forward, working together.
Especially right now, given the rift right now between the Treasury Department and the Federal Reserve, there is a question, and this is going to be an increasing one, of the politicization of the Federal Reserve. If Janet Yellen is tapped for the Treasury Secretary, Tom, there is no question she is qualified. I don't think anyone would disagree, but John, very much to your point, how much does this raise even more of the specter of either a Democratic or a Republican Federal Reserve chair? And what does that do in terms of their power or lack therein in moving forward unilaterally or independently?
Well, everyone keeps saying we need them to work closer together, Tom, so maybe this is it. You take the former Fed chair, you put them in charge of the Treasury, and you get them to work closer together.
Okay, I guess that's the thinking, John, but I think it also speaks maybe to the lack of qualified people out there from the business community. I think of John Connolly years ago. I mean, where's a banker to be Treasury? We don't do that anymore, do we?
They're hardly scraping the barrel going for Janet Yellen.
No, but where's Treasury Secretary Diamond or Treasury Secretary Fink? I mean, I think there's been a shift here in what we perceive a Treasury Secretary to be versus the old days.
That I would agree with, alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro. Coming up, with dollar weakness permeating through the FX market
Chelsea
this morning,
any good?
Alan Ruskin of Deutsche Bank will be joining us. They're up there, Tom. I don't know if they're title contenders.
They kicked the ball hard.
We talk about markets.
Thank you, Lisa.
Honestly, that will go in Tom's column. Next Monday morning, you'll find that on Bloomberg Opinion after a weekend of football games once again in the Premiership. Most read, just after Mohammed's piece on the things that matter, will be Tom on the Premiership.
better than expected, not only in terms of job creation, but also a sharp fall in the unemployment rate consistent with higher labor force participation. That's really good news.
Overall, the gain was solid, but even while this is a very robust pace of job gains, it's a lot slower than it has been in the summer months.
Great that we saw the job gains we did, but they still are diminished from what they were, of course, back in April and May. And the scarring, the sort of wounds that were created by COVID are beginning to fester.
I would caution people to look at the top line number because I don't think it tells the entire story.
employment relative to population is still well below where we were pre-crisis, and that's because I think that we're going to have some lasting damage.
Depending on what you look at, jobs creation or the unemployment rate, you have different views as to whether the improvement in the labor force is keeping up or slowing down.
Their CPG history, their experience, and really how we might be able to combine together to really create this fantastic public company. And so we kind of got into the SPAC thing a little bit before it became such a hot method of going public.
From London and New York, this is Bloomberg Surveillance for our audience worldwide, live on Bloomberg TV and radio. You've seen this movie twice before, 2 Mondays ago, then the Monday after, then this Monday as well. Good morning to you all. More positive vaccine news. The outperformance from the small caps up 1% on the Russell. A nice kiss of 1,800 on Russell futures there. The small caps outperform. Underperforming the NASDAQ. NASDAQ futures up by just 0.4%. The S&P marching on up 23, up by another 0.6%. Story hasn't changed. Switch up the board. Last week was just a story of downside surprises on the data. Retail sales disappointing. Jobless claims disappointing to the upside, the wrong kind of upside surprise on jobless claims. And at the bond market, it's kept a lid on things for you. Last week, yields lower by about 7 basis points on a 10-year. Today, just a bit of a breakout, up 3 or 4 basis points at the long end. 10s at 86 basis points, the 30-year at 156. That's the story of the bond market on a session. Want to finish on the FX market, a more compelling story for me over the last several weeks. The dollar weakness just has not flushed through G10. This morning, it does, with euro dollar out to 119, up 0.4%. Cable approaching a 134 handle at 133.78. The dollar index, the DXY, finally taking out the lows of September. The DXY heavily weighted to the euro story. The BBDXY, the Bloomberg Dollar Index, with a little bit of weight from that, away from the euro and towards the peso, towards the offshore renminbi. And Tom, that's important for the ECB. Euro dollar at 119. Might be unhappy with the currency rate against the dollar, but the Chinese currency strength might be the bailout for a lot of these central banks unhappy by what is happening with the dollar weakness through this morning.
Late ways to go here, John, with what we see on dollar weakness. And the perfect gentleman to speak to right now on this, truly our global Wall Street brief of the day, Alan Ruskin with Deutsche Bank, decades of experience of synthesizing together all of these trends. Alan, to John's point, you lead with the idea that forward a major pair will be dollar renminbi, looking for stronger yuan, and the idea that the Chinese yuan will replace the Japanese yen. How does that happen? How does a yuan take over as a dominant pair?
Tom, look, I think the Chinese economy is substantially larger than Japan's already, and that gap is only going to get wider over time. So its real economy influence is certainly increasing. And obviously, at the same time, the authorities in China are encouraging internationalization. They're encouraging the CNY's reserve status to increase over time. So the pull factor in terms of official flows is going to increase as well. So the combination of the real economy side and, the encouragement that, I think we're going to see from the authorities on an ongoing basis is just going to help the Chinese currency and its pull effect, against other currencies in the region.
Alan Ruskin, there's a parlor game to when strong euro hurts Germany, strong euro hurts Finland, or strong yen hurts Tokyo. At what level does strong renminbi hurt Beijing? Are we near there?
Look, I think there's going to be a lot of sensitivities in terms of even a very modest appreciation in the yuan. But I think we forget, I think, memory serves me right, the 10-year average is roughly around 650 on dollar China. So I think we shouldn't get too caught up with what's happened over the last 6 months or so, given the appreciation. We're actually back in a zone that's actually very well traveled. So we shouldn't be at points of extreme sensitivity. But, if we saw dollar China go to, say, 625 or those sort of levels, I think there would be more concern on the part of the Chinese authorities.
Alan, important to look at the currency pairs elsewhere. Euro China, China Japanese yen. And what we've seen is that Chinese strength against the euro in a more pronounced way as well. Do you think that makes it, for the ECB at least, makes them less sensitive to what's happening on euro dollar as we approach 119 and maybe go through 120?
Yeah, I think for everybody, if they look at their own currencies and they say, okay, well, yes, we are stronger against the dollar, but in fact, most other currencies are also stronger against the dollar. So net, there's not much change, as you say, between, call it the euro and other crosses. Then you get reduced sensitivity from the currency side, and people recognize that this is a dollar story. This is not a China yuan story or a euro dollar story. Up until now, it's been a mix, I would say, of a dollar story and a Chinese yuan story. Very little in the way of really being a euro story, which has been stuck in the mud.
So there's a question.
Well, Alan, we typically ask a question. Just quickly, let me weigh in, Alan. We typically ask the question whether we would need a weaker dollar and whether the world needs a weaker dollar. Do you think the world needs a stronger Chinese currency?
The imbalances have tended to grow over time in this particular crisis. The current account surplus in China is substantial in an absolute basis, less as a percentage of Chinese GDP. So I think there are potential distortions on that side. I would say, let the market do its thing. I think that's the most important thing. And then the imbalances will not build in a substantial way.
Sorry, I was trying to jump in because honestly, I was just so compelled by this argument here that there used to be this world order where everyone was trying to depreciate their currency, and all of a sudden there is less emphasis on that because there is a question: recovering, getting money into your economy is better. At what point does strength in currency matter again from a trade perspective? And I wonder about this with the UN, given the fact that Chinese officials have been willing to step in, and given the fact that internationally this has been such a big driver of flows into the nation.
So I think, what's interesting, if you look at currencies generally on a sort of medium-term basis, the valuations that you're seeing are not that extreme. So, the dollar's within about 5% of fair value, give or take, depending on different metrics. And, that's not extreme by any matter of, any measure. And the same can be said for most of the other currencies as well. So, I would say the yuan, euro, yes, the dollar looks on the rich side. Yes, the euro looks a little cheap. Yes, the Chinese yuan looks a little on the expensive side as well. But in terms of the actual absolutes, these are not huge overshoots and undershoots. And I think for that reason, it's actually going to be relatively comfortable terrain for the authorities to deal with at this point in time. It could get a lot messier than this. I've, certainly seen it, much worse shape in the early 1990s or, mid-1980s. These are relatively benign circumstances for the authorities to deal with.
On the flip side, Alan, if you take a look at derivative positioning, you can see that the short position on the dollar is increasing, and sort of the conviction, the complacency in markets around this consensus call seems to be growing. Do you see a potential for a short squeeze or some sort of information to come out, perhaps about the vaccine being delayed, that could potentially lead to a reversal here and strength in the dollar that could upend a lot of these trades?
The positioning, I think, is also quite modest in the grand scheme of things. You highlight, the vaccine story, which I think is, pertinent. It's going to be critical for the real economy for the next year or 2 years, crucial for markets, and is probably the dominant theme, I think, on an ongoing basis. Some think it's maybe already priced in, but I think that's way too early. And I think, if you saw the reversal in those sort of trades, absolutely. I mean, I think, you could get some sort of short squeeze. That's always possible into year-end, into December. But I would tend to emphasize the trend trades. I would say the vaccine trade is, long the cyclicals in G10, Canada, stocky, NOCI, et cetera. I think it's still long EM. It plays to the long Asia trade, et cetera. So I think it's still, on a medium-term basis, is still playing towards a short dollar trade rather than, focusing too much on the squeeze potential.
Stocky Noki, just classic FX lingo there. Alan, thank you. Alan Ruskin, Deutsche Bank Chief International Strategist. Sweden, Norway, just in case anyone's interested.
I didn't know that.
Guy Johnson's favourite currency pair, actually. Guy Johnson's favourite currency pair, Stocky Noki. Looking at the situation right now, Tom, if you're thinking about policy areas, you've got to think about where they're going to come from. And I think the biggest risk right now for a policy error comes from the fiscal side. We're about to see one of the biggest super spreader events of 2020. It's the Great Thanksgiving migration over the next week. And the numbers that come out the other side of that, to some degree, will dictate what the policies look like going into year-end as we start to roll out this vaccine. If you start to see people lock down economies again across the United States, governors, mayors do that at the state level and the city level as well, and you don't see those incomes offset, do you think that's the button that gets pushed, that finally gets people to wake up and think, you know what, vaccine trade is on, but I'm pretty worried about what could happen in the near term?
There's a number of threads here that are really important, John, but just to pull out the one of the zeitgeist of the weekend, this is a Biden administration not planning for recession, but they're really, really, really thinking about if they get a Q1 slowdown that rolls into Q2. And there's not a gloom there, but there's just an awareness about things have slowed down quickly. And that's what I would watch more than anything, is that tension between Pelosi, Biden, and as they look over after Georgia, perhaps it's Senator McConnell of Kentucky.
Already seeing that in the data. Retail sales claims. There is an anticipation that it gets worse from here. Lisa, going into Q1, as Tom points out, Mr. Feroli over at JP Morgan is looking for that Q1 weakness to kick off 21.
Yeah, and there seems to be this belief that, among most people anyway, that there will be a temporary decline, and it could be a steeper decline, but that once we get the vaccine, everything will be fine, or that things will roar back. Again, though, it goes to the scarring question, right? I mean, especially if you don't get financial aid from the federal government to states, if you start to see those layoffs that we heard from Pat Foy of the MTA last week, how much does that change people's appetite to buy? And there have been some reports, John, about retail sales going forward into the holiday season, about the expectation it could be a lot softer than people expect, and how that could be a catalyst to a little more weakness than currently is being priced in.
You know the word I keep hearing, normal, we get back to normal. Tom, do you have any idea what normal looks like post-COVID after we've rolled out the vaccine? Does it look like things look like pre-COVID? No. Or have we accelerated? We brought the future forward 10 years just in terms of how we work.
Michael Spence was on the Laureate, and he made very clear our definition of pre-normal just isn't there. We've got Reinhardt coming up, and they aggressively say we're not going to get back to that normal. I mean, it's a raging debate, John.
We've got to talk about this vaccine as well from AstraZeneca Oxford. The vaccine found to be highly effective in tackling COVID-19. More positive news on another Monday morning with a huge cyclical tilt in this equity market. Up next on this program, Dr. Deborah Fuller, the University of Washington School of Medicine. That's coming up shortly. From London and New York this morning, good morning. Heard on Bloomberg Radio, seen on Bloomberg TV. This is Bloomberg Surveillance.
With the First Word News, I'm Ritika Gupta. Another vaccine has shown promise in the fight against the coronavirus. The shot developed by the University of Oxford and AstraZeneca prevented a majority of people from getting the disease. It stopped an average of 70% of participants from falling ill. That's less than vaccines from Pfizer and Moderna. However, effectiveness rose to 90% for one of two dosing regimes. A former national security advisor to Joe Biden is expected to be named Secretary of State. The announcement about Anthony Blinken is likely tomorrow. Blinken also served as Deputy Secretary of State during the Obama administration. Plus, former Hillary Clinton aide Jake Sullivan is likely to be named Biden's national security advisor. President Trump's campaign has disavowed a member of its post-election legal team. Sidney Powell has pushed some of the most extreme conspiracy theories around the vote. A statement from the campaign said that Powell is not a member of the Trump legal team, even though the president had said that she was. Secretary of State Mike Pompeo says the U.S. has withdrawn from the Open Skies Agreement because Russia isn't complying. The treaty allows countries to fly unarmed reconnaissance flights over each other's territory. It's designed to reduce the risk of war. Democratic Senator Bob Menendez called the move reckless. He urged the incoming Biden administration to reverse the decision. United Airlines is expanding coronavirus testing for 10 locations served from Houston, amongst them Aruba, the Bahamas, and Lima, Peru. All the destinations require testing. Passengers will have the option to take a self-collected mail-in test that meets local entry requirements. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
A sense of the real-time action, the 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
Very difficult situation at all levels. So I think I would hope that the people who are pushing back on the recommendations for mitigation measures just look at the numbers, look at the facts. They're staring us right in the face. You know, we're not talking about shutting down the country and locking down completely.
Dr. Fauci there, National Institute of Allergy and Infectious Diseases Director on CBS's Face the Nation over the weekend. The numbers are not looking good going into the Thanksgiving holiday. From London and New York this morning, good morning. Alongside Tom Keene and Lisa Bramvitz, I'm Jonathan Ferro, live on Bloomberg TV and radio. Here's the price action this Monday morning. You've seen this Monday after Monday after Monday. More positive vaccine news is what we want to wake up to kick off a new trading week. Euro dollar reclaiming 119 on a single currency. Some euro strength. Really, it's all about dollar weakness through G10. Euro dollar up and up and up by 0.4%. In the FX market, that's your story. In the equity market, here's the stock story. Up 23 on the S&P 500. We advanced 0.6% and add a little bit more weight to the cyclical story. The small caps outperform big tech and the NASDAQ, at least so far this morning anyway. And in the Treasury market, we do have a lift. You've got a lift in Treasury yields by about 3 basis points to 0.8586%, about 10, 11 basis points off the highs we hit 2 Wednesdays ago, Tom, on a 10-year maturity.
Very good. John, Lisa, and I, and all of Team Surveillance feel very strongly punditry's out and experts are very in. Deborah Fuller is not only at the prestigious University of Washington School of Microbiology, but also is definitive in labs in the processing and the development of vaccines. And we're honored that Dr. Fuller could join us this morning. Dr. Fuller, we've got a lot of questions about vaccines and all that. I want to go to my childhood, which was the dreaded booster shot. Is a booster shot now the same as it was in 1960? Or is a booster shot now so efficacious and the technology so much better, it's not a big deal?
A booster shot in vaccines, particularly the COVID-19 vaccines that we're seeing right now, is absolutely essential to increase and bring the immunity in individuals that get the vaccine up to higher enough levels to protect against the infection. So booster shots can feel dreaded in the sense that you might experience increased reactogenicity, in other words, a bit more soreness in your arm. But that tells you that it's working. That's what, when you get that soreness and sort of feeling kind of almost like you're getting an infection, initially that tells you that your immune system is mounting a really good response to the vaccine and that you will likely be protected against an infection.
So Tom Keene is talking about booster shots in light, I assume, of the AstraZeneca news that came out this morning. Really confusing, more confusing than what we got out of Pfizer and Moderna in terms of efficacy, with some statistics saying 70% efficacy, others saying 90% when you have a half dose initially followed by a full dose of this vaccine. Dr. Fuller, how complicated is the rollout effort when you do have to have 2 rounds of a shot in order to get it, make it effective? I mean, in terms of tracking, in terms of distribution, and frankly, in terms of how long it takes to get immunity?
That's a really important question. An ideal pandemic vaccine would be one that works in a single dose. And that's just simply because if people have to receive a second dose, often compliance and coming back for the second dose can go down, especially if they experienced some reactogenicity with the first dose. So many of these companies were looking at the immunogenicity after the first dose, but the levels of immune responses are just not high enough to be confident that it's going to provide the level of efficacy that's needed. On the other hand, after the second dose, seeing 90% plus efficacy, that's as good as a vaccine is really going to get, and that's really what we're going to need ultimately to shut down this pandemic.
Doctor, that's science. Let's talk about the logistics. How many vaccinations do you think we could roll out in America over the next 3 months?
Well, Moderna and Pfizer, as a result of their promising data now, AstraZeneca will likely be applying for emergency use authorization in early December. They should have enough safety data by then to be able to make the application. That, of course, will only be the vaccines initially will only be available in a limited numbers. That would be for high-risk groups. That would be for your first responders and medical personnel. The majority of us really won't be seeing these vaccines until about the spring. And some of the challenges between then and now will be being able to produce sufficient numbers of doses. Billions and billions is what we're going to need because we we estimate at least 50 to 60% of the population will ultimately need to be vaccinated to shut down the pandemic. And so that really raised an important point, is that we really need multiple vaccines, not just one. It's not going to be one silver bullet being able to shut this down. The fact that we're seeing all these vaccines look really at about 90% efficacy is super promising.
Dr. Fuller, George Saravelis over at Deutsche Bank today has a Deutsche Bank chart out on herd immunity and its lovely smooth curves of expectations. Do you trust the math and the forecasting of herd immunity, or are we actually making it up as we go?
That math is really elegant stuff, and it is really based on some important measurements. So yeah, we can trust the math. What we don't know, some of the things that we don't know going into this math is the changes in the infection rate that could occur between now and then. So the predictions are based on, what we know now. And as we have seen, we've seen a huge surge in cases as the weather cooled, and that actually exceeded the number of cases that was initially predicted at this time for reasons that, for example, pandemic fatigue and stuff that really can't be predicted. So while the math is precise, it's based on what we know, not what we don't know.
Doctor, appreciate your time, your thoughts and honesty. Dr. Deborah Fuller there of the University of Washington School of Medicine. So base case, Tom, these are the numbers people throw around and they're educated guesses. 70%, you need to get the population, 70% of the population vaccinated. And the bulk aren't going to see vaccinations until when? End of Q1, March, going into Q2. They're the kind of numbers we're playing with right now. And obviously they can move. They're just the kind of numbers we're thinking about at the moment.
I, John, go to the virulency of the actual bug. And the answer is pros really emphasize the strength of the disease, the illness, and amateurs underplay that. I'll lean on the pros here about the virulency of this vaccine.
Well, for the professionals in our world, for market participants, Tom, I think the big question is how much can you de-emphasize the short-term risk? Jonathan Golub of Credit Suisse was talking about that with us just last week.
Yeah.
How much can you do that if this could go on through Q1 into Q2 before that vaccination rollout really starts to make an impact on the kind of restrictions you can have in this economy, or rather the restrictions you won't need?
We're stuck out to where's the end of the bridge, the cliche that we knew of March and April and even May of this year. John, how far out is that bridge right now? I don't think people have a clue. They're making it up.
March, April 2020 becomes March, April 2021, maybe. Coming up, David Rosenberg, Chief Economist and Strategist for Rosenberg. Looking forward to that. This is Bloomberg.
In our interconnected world, if people in low and middle income countries miss out on vaccines, the virus will continue to spread and the economic recovery globally will be delayed. Equitable access is in the national interest of each and every country.
But this also means if we have a vaccine, we should have a common approach to give a fair share to everyone, so that the most vulnerable groups, the frontline workers and the healthcare workers, for example, are the ones who get the vaccine first.
we're donating another $70 million to fight COVID-19. $50 million of that will be for buying vaccine doses for low-income countries, and another $20 million will be for researching even further in new vaccines altogether.
Il nous faut nous assurer que les conditions réglementaires et politiques sont toutes réunies pour un accès le plus large et rapide possible à ces produits, tout en respectant les standards internationaux de qualité. C'est pourquoi la France propose que puisse être rapidement adoptée une charte d'ACTA qui réaffirme ces grands principes: partager la connaissance, soutenir les systèmes de santé, avoir des produits rapidement accessibles et abordables.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Scenario for markets would be if the unemployment rate in November will begin to go higher.
Equity volatility and equity uncertainty still remains elevated.
In the very short term, we are very much due for a tough time.
If we take a longer term perspective, we have a pretty supportive market.
Once those vaccines hit next year, we're going to have a big year, 6% growth.
The Fed has been quite clear that they expect the federal government to hopefully provide more income support.
What they really want is for Congress to do its job, and that's not happening.
Even in supposedly the good places know where there is reflation, central banks are worried.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Bloomberg Surveillance. Jonathan Farrow, Lisa Abramowitz, and Tom Keene. Thank you for being with us on Bloomberg Radio, Bloomberg Television. This is an important hour to get this interesting week and this interesting December started. The Reinhardts will join us later in the hour. Carmen and Vincent Reinhardt with my essay of the summer. David Rosenberg in moments. And part of this, John, is Rosenberg particularly wrapping around the market movements. Here's what we see this morning. It's the only thing that matters. John, dollar out to new weakness.
A dollar weaker, DXY taking out the lows of early September, Tom Keene. That's a dollar index heavily weighted towards a single currency. The single currency, the euro dollar nicely through 119. Once again, it's another Monday with a cyclical tilt. Small caps outperform big tech, largely off the back of some more positive vaccine news. That tug of war, Tom, has gone nowhere. It's the virus versus the vaccine. And the downside surprises we've had in the economic data over the last week. We need to pay attention to that. I'm really excited to hear what David's got to say about what's been happening in the U.S. economy.
Let's frame that right now, John. It's real simple. I look at the five-year forwards, and they're each different for each country. The answer is I got disinflation trend in the United Kingdom, a little bit of a rolling over of disinflation trend in the United States, and maybe the euro is somnolent, as they say, John, right now. John, what do you see in terms of disinflation?
Retail sales, downside surprise. Jobless claims, upside surprise, the wrong kind of upside surprise. That's the labour market still, Tom, with a lot of slack and a lot of work to do to close that gap.
We mentioned earlier the Biden administration transitioning over to a slowdown Q1 and the recession word floating around. I don't want to overplay that too much. Lisa, we're going to talk to Rosenberg here about the linkage here, the Fisherian linkage here of yield, interest rates, and all that. Give us a yield brief this morning. How tight is that spread of credit debt versus full faith in credit?
If you look at investment grade debt, you're looking at the tightest spread since August, but hitting close to the tights of the year. The idea here is that investors are more willing to lend to companies, even riskier ones, if they believe there is a vaccine that will bring the economy back to some sort of normal. You could debate what that is, but faster growth ahead. Tom, one of the key questions, though, as you talk about disinflationary trends and really low yields, with treasuries having their best week last week since August, is a question of what is the consequence of all of this debt on the markets, on growth going forward. That will be an overhang. That will be a drag on growth. How does that factor into inflation, Tom?
John, before we get to Mr. Rosenberg, how about the idea of stimulus? Greg Villiers saying, surprise, McConnell, the president-elect agreement in December. What do you see, John, in your reading?
Look, if you want to negotiate, you've got to negotiate clearly with an objective to get a deal. Otherwise, what's the point? And we talked about this last week. You can't ask someone to put aside their differences and then negotiate on your terms. That's not how it works. If this is going to be a Republican Senate beyond January, you have to deal with the Republican Senate we've got now anyway. And this Republican Senate doesn't want a deal north of $500 billion. That's what you're playing with. If you know this economy needs to get some fiscal stimulus fast, if you know we need to offset potential losses to income because we could see more restrictions, $500 billion is the number to get it done quickly.
A lot of talk this weekend, folks, about 2020. I thought Politico had a particularly good article on all the Senate races and vulnerabilities the Republicans face 2 years out. This is a joy. David Rosenberg, for years, held court at Merrill Lynch and owned the high ground on parsing price change. He was absolutely brilliant and hugely read, moving on to all sorts of good work in his Canada and now Rosenberg research, their chief economist, strategist in Montreal, Canadian fan. David Rosenberg, I want you to filter disinflation into what yield does. Is it just about a demand for paper, price up, forcing yield down?
Well, look, I think that there's a whole variety of things that goes into bond yield determination. The expectations on the Fed and real rates, inflation expectations, obviously both very large. I'm in the camp that thinks that we're probably caught in a range. I'm always amazed that people think the 10-year is going to break above 1%, go back to 2%. I don't think that's going to happen. I think that there's still going to be globally a downward pull on Treasury yields because I think inflation expectations, given the size of the output gap, are going to come down over time. And at the same time, if you're taking a look around the world, you take a look at the average AAA yield, it's barely above zero. And in the U.S., you get at least, 70 or 80 basis points. So, it's in the land of the blind, the one-eyed man is king. And I still think treasuries offer very good value on a relative basis.
David, I think what you're saying is really, really important. It's about the post-COVID world and defining what is normal. And many people seem to think that post-COVID, with a vaccine, treasury yields have no business south of 1%. You're pushing back against that, David.
Well, I am pushing back against that because, what's your expectation on what the Fed's going to be doing? Ultimately, your forecast in the 10-year yield has to be some scrolled expectation of what short-term rates are going to be doing over a certain horizon. The Fed's already told you that, they're not going to start to raise rates till inflation gets above 2%. Well, we'll wait a long time for that and for us to return to full employment. And that's going to take a long time as well. On top of that, look, there's no doubt that we're going to get a couple of quarters of pent-up demand release once the vaccine is broadly distributed. That's going to happen. Which exactly quarter it's going to happen next year, who knows? But it's going to happen. So we're going to get a couple of quarters of pent-up demand release. And then what does the world post-COVID look like after that? And we never got the inflation from 2009 to 2019, despite all the stimulus, despite the Fed. The reality is that the same thing, the fundamental secular developments, have nothing to do with COVID that brought us to low inflation and low interest rates and low growth. Aging demographics, well, how has that changed? And monumental debts. So you're going to have the Reinhardts on. Well, we'll talk about then, I hope, how these massive run-up in deficits and debts are going to be dealing with those, resolving those. There's going to be a huge constraint on aggregate demand for years to come. How are you going to get inflation out of that? So we're going to get a bump in growth. Bond yields may go up 25, 30 basis points, and then they're going to come right back down again because the same fundamental forces that brought us down 200 basis points on the 10-year note in the last cycle are going to be the same forces that drive yields back down towards zero.
David,
in the next number of years.
This is fascinating to me, and it comes at a time when a growing number of strategists expect the Federal Reserve to increase their longer-dated bond purchases at their meeting next month. There is this expectation that $80 billion of purchases a month will be more heavily weighted toward the 10-year, 20, and 30-year maturities. Why should the Fed be doing that if you are right and if yields are going to remain low because the economy just is not going to grow that quickly?
Well, that's just another form of what they used to call Operation Twist. Who knows if the Fed is going to go that route or not this quickly. It's not as if the 10-year Treasury note yield has really broken out. It's really just in a range, you can argue, in the top end of the range in the context of a stock market that's gone up 60% from the lows is pretty remarkable in its own right. But that's basically the threat that will always be there is that if bond yields become unhinged, the Fed will come in hard and cap longer term yields because that would be a form of financial market tightening. It would cause mortgage rates to go up. It would, detract from one of the positives in the economy, which has been housing. So I think that is an ongoing threat, just to know that the Fed can come in. It's like you were talking about credit spreads before. Knowing the Fed is going to come in and buy corporate credit, buy high-yield bonds, just knowing that threat exists is what's caused investors' comfort to go in and add on risk in corporate credit. It's very similar at the long end of the curve, where you might be more comfortable taking on duration risk, knowing that the Fed could do this at any point in time. Whether or not they do it or not, or they talk about in the minutes, I mean, who knows? But that's still out there. And that alone helps cap the long end of the curve.
David, I want to talk, you mentioned the Reinhardts, and we're thrilled they're with us later in the hour, folks. My essay of the summer, The Pandemic Depression. David, pretty gloomy assessment. You're not a gloomy guy. What do equity markets do if you get Reinhardt caution and gloom?
Well, look, we had the worst recession since the 1930s. We had a 1 month drawdown of 35% in the stock market, and then we bounced right back. And actually, when you go back to some of the most horrific days on economic data, when we're going back, Tom, to like April and May, like at the depths of despair, the markets actually already started to rally. And so I think that the mantra of, don't fight the Fed, there is no alternative, all these things that I used to roll my eyes at, it seems to have worked in terms of creating confidence and sentiment. It's a confidence-led market, a sentiment-led market. We have a 2-year, like when you're taking a look at the PE multiple on 2022 estimates, it's 18. I remember when I started in the business, an 18 multiple on trailing would have been unbelievably expensive. Today, people think, an 18 multiple on 2-year forward earnings, the market's still cheap. So that's the mentality of the marketplace. So I would say that as long as you have the Fed there saying we're going to pump the system with liquidity, and so long as you have this belief that the vaccines will return us to the old normal, which is not my view, but that's the market's view, then the stock market may well continue to surprise on the upside. And so, I'm not bullish on the market, but that's the narrative, and that narrative has certainly won the day over the course of the past 6, 7, 8 months.
The old normal, a few crises ago. David, great to catch up. Tremendous respect for the amount of work that goes into your research, and fantastic to have you with us on the program. David Rosenberg there of Rosenberg Research. And isn't that the story, Tom? Last week we talked about an equity market pricing in this story of hope, and maybe the bond market was doubting that. But to David Rosenberg's point, this Treasury market might just look like this Treasury market for years to come. This Treasury market may just look like the Treasury market before COVID, after COVID, and during COVID, yields south of 1%.
Yeah, it's really, really important to look at the what if separate from the emotion. Right now, the emotion's on this horrific pandemic. But you're right, John, it could really go for quite some time.
The emotion in Washington, D.C. Up next on this program, Isaac Boltanski, Compass Point Research Managing Director from London and New York this morning. Good morning to you all. This is Bloomberg.
With the First One News, I'm Ritika Gupta. Another promising development in the fight to end the coronavirus pandemic. A vaccine developed by the University of Oxford and AstraZeneca prevented a majority of people in a large trial from getting the disease. It stopped an average of 70% from falling ill. That's below the high bar set by Pfizer and Moderna. But effectiveness did rise to 90% for one of two dosing regimes. Joe Biden plans to name longtime advisor Anthony Blinken as Secretary of State. When Biden was vice president, Blinken served as his national security advisor and later Deputy Secretary of State. Bloomberg's learned that former Hillary Clinton aide Jake Sullivan is likely to be named national security advisor. In the UK, Chancellor of the Exchequer Rishi Sunak said he will increase spending on public services this week. He is trying to shore up the economy in the midst of a resurgence of the coronavirus. The focus of Sunak's spending review on Wednesday will be the pandemic. Foxconn will finally start mass production at a Wisconsin plant championed by President Trump. Bloomberg has learned the company plans to assemble key components for Google servers at the factory. The facility was unveiled to much fanfare in 2018, but it succumbed to delays and switched directions several times after local officials cut subsidies. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
This new law that came down from China's National People's Congress Committee ended up leading to the disqualification of 4 pro-democracy lawmakers.
This is probably the very final and complete crackdown.
I hope you understand it is not anything new at all. This was supposed to happen
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
Has to be done. I frankly do think it's time to, well, it was past time to start a transition, to at least cooperate with the transition. I'd rather have a president that has more than one day to prepare. Should Joe Biden, end up winning this?
Should he end up winning this? This is the diplomatic way of approaching this situation as a Republican. That was Republican Kevin Cramer there of North Dakota speaking to the press over the weekend from London and New York this morning. Good morning. Alongside Tom Keene and Lisa Bravitz, I'm Jonathan Ferro. Here's a price action this Monday morning. We advance with a cyclical tilt once again on a Monday off the back of some positive vaccine news, this time from AstraZeneca and Oxford University. You'll hear about that a little bit more a little bit later from the Prime Minister Boris Johnson at 7 p.m. local time, so that's 2 Eastern. In the FX market, euro dollar 119, we advance a third of 1%. Stronger euro, much stronger dollar. The story through G10 and EM today. In the equity market, up 19, call it 20. We add about 0.6% onto the S&P 500. And there's a lift in Treasury yields, Tom, up about 3 basis points. In about an hour and about 30 minutes or so, we'll get a PMI in the United States of America. Worth looking at just for a read on how this month is developing, given the downside surprises we've had so far.
Yeah, I'm not a fan of PMI data, but I do take your point, John, that PMI data right now is important. We saw some European data like that out today. Right now, Isaac Boltanski with us. As you heard the junior senator from North Dakota try to manage the message forward, Isaac Boltanski at Compass Point Research tries to manage the policy message forward. Isaac, if we were to have meetings of a Biden administration transitioning or real, and Republicans in the Senate, what moves the needle are disaffected Republicans. Are they out there?
Yeah, I think that there are undoubtedly Republicans who truly believe that the president should avail himself fully of the legal system in front of him. But I think that the reality is right now the president is seeking salvation through litigation, and there just has been no sign whatsoever that any of those attempts will shift the outcome in a single state, let alone the entire Electoral College. So what we have seen over the weekend in particular, Tom, is a slow but steady stream of Republicans saying either that the president-elect should begin getting the security briefings and the transition should progress, or just outright that President-elect Biden won the election.
Isaac, there seems to be little uncertainty about whether Joe Biden will end up being the president come January. There is, though, a question of how much damage will be done to the potential cooperation between Republicans and Democrats to get any sort of deal done, not only in the lame duck session, but also come January when Joe Biden takes office. How much has Joe Biden's whole platform been threatened by the complete dissonance in Washington, D.C. over even who won the election at this point?
Yeah, look, D.C. is people and process, right? And that's what makes this transition period so important. It's about getting the people in place. And what we have right now is a clogged process. And in part, that's due to the General Services Administration, the federal agency that has responsibility for effectively starting the transition process, not certifying Biden's victory yet. And so there are really nitty-gritty things here that impact this. First and foremost is you're struggling to get some of the FBI background checks done on some of these people. So the big picture for me is this is slowing what needed to be an exceptionally seamless transition, given that we're facing a global pandemic and economic suffering. And so I have to ask myself the question, I'm asking myself the question, how often will Washington trip on its shoelaces? Because it's not just this transition, it's also Secretary Mnuchin's decision with the Fed.
Sure, and I think at this moment, it's probably the hardest transition in a long time. We're about to undergo the greatest vaccination effort in modern history, Isaac, and I just wonder what that looks like. When you speak to people down in Washington, D.C., have you got clarity on what that looks like? What needs to happen between now and January 20th to make that as smooth as possible?
There is undoubtedly optimism regarding what's going on the vaccine front. And I think that we should be heartened by the headlines that we've seen now 3 different times about the science and the process that has been, that has driven that science. But distributing these vaccines in a timely and efficient manner is going to be a Herculean effort, even when you have all parts of Washington rowing together. And right now we don't. Parts of Washington simply aren't rowing at all. And I am deeply concerned about how any of the problems with this transition will impact the actual rollout of the vaccine. There needs to be more clarity and more concrete steps in getting personnel in place and ramped for this sort.
Okay, I'm looking for a catalyst to get off the needle here. Get going. Isaac, Politico had a great article, Burgess Everett and John Bresnahan, on the Senate race of 2022. Let me cut to the gentleman from Ohio. Is Portman somebody who's going to unilaterally say to McConnell, enough, let's go, let's deal? Or does he not have the power to do that?
It's almost deeply concerning to already be talking about 2022, but 2022 and those races in the Senate are what will drive what I believe will be Majority Leader McConnell's. But it's going to drive McConnell's thinking. He wants to be the majority leader for the
Okay, but is it going to be, Isaac, I don't mean to cut you off, but we're running out of time. Is it going to be December thinking?
I think there's going to be a brief period of legislating. You're going to have progress on top cabinet positions. You're going to have a brief window for legislating on fiscal stimulus and maybe even narrow infrastructure. But then slowly but surely the deficit hawks return, gridlock overtakes, and we lurch from deadline to deadline on the legislative front.
Well, Isaac, let me ask you this. Is that popular with the electorate? Is fiscal conservatism popular when we get to 2022?
It isn't broadly, but it is in some of the primaries that Republicans in these Senate states are going to fear. And so I think that's why you see the overarching shift towards deficit hawks returning in some corners of the Republican caucus in the Senate in particular, and definitely in the House. So look, I think as long as we can get a narrow, targeted fiscal stimulus done, it will be easier for Republicans to retrench into that deficit hawk branch.
Isaac, great to catch up. Thank you, sir. Isaac Bortadsky of Compass Point Research. The echo of coming out of the last crisis, Tom, is pretty loud, isn't it? Thinking about what the future might hold here in the coming months and years with a split government, a divided government on the fiscal front.
You know, we've had times where this is broken, where, you know, people have gone through and protested and really railed against the majority. And, John, I just wonder, how does that happen this time around? Not only the majority in the Senate, the majority in the House, and, of course, Mr. Biden setting his tone. I think that the uncertainties here are way more because we're all distracted by the transition and Mr. Trump, et cetera.
I totally agree, but don't you think this pandemic has changed the conversation?
Yeah,
Tom?
Absolutely.
The 500 billion now. 500 billion is considered fiscally conservative now in 2020 going into 21.
Yeah, John, absolutely. And again, I go back to the horrific hospitalizations. I mean, those numbers are just grim. No other way to put it.
Coming up on debt, demand and potential growth, Carmen Reinhart, World Bank Chief Economist, and Vincent Reinhart, Standish Mellon, Asset Management Chief Economist. Looking forward to that conversation coming up very shortly right here on Bloomberg Live on TV and radio. This is Bloomberg Surveillance.
Well, the main instruments on board include a dual frequency radar altimeter. And this is the primary instrument of the mission, and that's the one that's measuring sea surface height, significant wave height, and wind speed over the ocean. And from those measurements, we can actually have the superb measurements that we expect of sea level rise, but also the waves. The significant wave height, which is the top 1/3 of the waves, if you were to look at them in time.
Sea level rise is accelerating, and it is not geographically uniform. In some regions, the rate of rise is 2 to 3 times faster than the global mean. This means that in this region, the elevation since the beginning of the 90s is now nearly 30 centimeters, which is not negligible.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
Live on Bloomberg TV and radio, this is Bloomberg Surveillance, and here's the price action this Monday morning. Just a little bit of cyclical appetite, a little bit of vaccine optimism. What do you get? An equity market that has a lift up by 20 on the S&P 500. And that vaccine story captured quite neatly by the divergence that we've seen between small caps and big tech. Once again, the Russell outperforms. The Russell up 0.9%. That's the equity story. Here's the bond market story for you just quickly. Yields up, curve steeper. Last week, downside surprise on retail sales. Upside surprise, the wrong kind on jobless claims. Yields capped, yields lower. This morning we pushed higher. What are the limits of these moves? That's the big question for us going forward from here. Given the amount of debt we've added to this economy, our tolerance level for higher interest rates, how much has that been reduced over the last 9 months? Up by 3 basis points on a 10-year to 85. Switch up the board and just finish on this. Some really key levels and key dates to keep in mind. August 26th was the post-pandemic high in the oil market. We are within $1 of that in WTI right now at 42.85. August 31st was the low for the dollar index, the DXY. We took out that level this morning. Euro dollar out through 119, just short of that at 118.98. Cable just short of 134. The pound advancing as well. So we've got some dollar weakness, Tom, and we've got crude starting to get that lift, and we go back to the levels of summer. Can we hold them? Can we push through?
Yeah, there's no question about the lift with Brent printing 46 this morning is one of the first things I noticed when I walked in the door. This is a joy. We've always prided ourselves in bringing you the best in economics. And in the summer, when everybody thinks and writes, the best in economics can be 1, 2, 3, 4, 5 essays, books, or articles. This year was easy. Carmen Reinhart and Vincent Reinhart wrote a tour de force for Foreign Affairs magazine and made world headlines in the economics community with the pandemic depression. We are thrilled that the World Bank chief economist could join us this morning. And Mr. Reinhart, of course, was Standish Mellon in their asset management as chief economist. To the two of you, congratulations on putting together this essay. How did you piece it together? Carmen, did you say, Vincent, we got to write this, the world's coming down to an end? Or Vincent, did you tell Carmen, we got to do this? Carmen, you start. How did you generate this important essay?
Well, Tom, Vincent and I have been writing together for a long time. So, back in 2010, we wrote for the Kansas City Fed for the Jackson Hole Conference, what the next 10 years after the global financial crisis looked like. And it was taking stock of the aftermath of major shocks, So this certainly classifies as a major shock. And these kinds of events leave lasting consequences. And so
Right.
that's basically the theme where we came together.
Let us drive the story forward. And folks, again, I can't say enough about a full read of this article in Foreign Affairs. Vincent Reinhart, how do we escape this depression? And if we have a global or a United States depression, is stimulus and large stimulus the only answer?
So the sad thing is this really is the third time we wrote this article for 2008 for the European crisis and one more time for this pandemic depression. What do you need? You have to follow Larry Summers' advice. Targeted, temporary, and timely fiscal stimulus. They did it back in March with the CARES Act. They can do it again.
Carmen, can you build on something for us? Confusing a mechanical bounce with the recovery. Is that what we've been doing over the last few months?
Yes. Look, a very simple, basic definition of recovery, a minimum minimorum, is you at least have the same level of income, same level of GDP that you had before the crisis started. That took quite a number of years, 5 years in the US from the last, the global financial crisis, and even longer for Europe. So yeah, before that, we see a snapback. We see growth rates come back simply because the declines were so sharp in the earlier in the year. But that is rebound. Recovery is when you're at least as well off as you were before, and that will take some years.
So in your mind, Carmen, do you think this is a political bias, a political decision to make the call to say, look at the recovery, confuse it with a mechanical bounce, and say we don't need more fiscal stimulus? Or do you just think it's a failure of the understanding of economics that we continue to make, as Vincent points out?
There is no simple answer. It has elements of both, but we've seen it in history, often enough. The premature declaration of victory is always been a recurring theme, that the first signs of recovery, the green shoots, means that's it. And I think that this time we really didn't learn much from the over-optimism of 2008, 2009, where growth forecasts had to be marked down repeatedly.
So, Vincent, can you build on that with the idea that we're heading into a winter where we have a virus that is actually expanding, worsening, spreading, even though people are getting more concerned about the debt, about adding to it with more fiscal support? Do you think, Vincent, we are headed toward a double-dip recession that will hamper growth in a longer-term way with scarring economically that currently is not being modeled for?
So the rebound has enough strength right now. There is waning fiscal impetus, but most importantly, there's considerable monetary accommodation. Households have a lot of savings, so they have the wherewithal to spend. It isn't as much a risk of a double dip. It's a risk that we extend the rebound, that it takes even longer to get to recovery. And the longer it takes to recover the level of activity, the more likely unfortunate things happen. Balance sheets get strained. There are even more business failures. People lose more and more skills and exit the labor market. So I'm more worried about the permanent scarring associated with taking too long to get to recovery, because usually you can bet on market economies.
So what does that mean, Carmen, in terms of emerging markets insolvencies, the idea of this emerging markets crisis that a lot of people have been talking about, including yourself? Do you think that if we do get this period of scarring, as Vincent is talking about, that you do get that wave of insolvencies in the developing world that so far we haven't seen?
Well, before we say we haven't seen, the pickup in activity even before the pandemic, we had a lot of frailties in the low-income economies and in several emerging markets. Witness Argentina, Lebanon, Venezuela, Ecuador, now Zambia. This is a longer list than what we have had in years. And of course, not everything happens simultaneously, but I think the stage is set for, a number, as I said, especially vulnerable are some of the lower income countries, but not limited to, a very protracted period of financial fragility, both in the banking side, and the possibility of, in the worst cases, outright sovereign debt crises.
Right.
And they don't need to be with the drama of a default, but they would be still requiring restructuring, still requiring coming to the IMF for programs and so on.
Carmen Reinhart, Vincent Reinhart with us here this morning on their important article, The Pandemic Depression in Foreign Affairs this Summer. It was without question my essay of the summer. Carmen Reinhart, a question for you, and it's delicate as World Bank chief economist. Do we completely misjudge the percent of GDP of stimulus, aid, income replacement that will be required? Are we as sort of institutions and elites completely misjudging the 2 to 3% of GDP is not going to get it done, and the statistic is much more towards 5 to 6% of GDP?
Tom, it's not entirely a misjudgment. It's also a reality of capacity. I mean, if you're speaking about the emerging world, the private capital flows have significantly retrenched. I wouldn't say dried up. And so it's really the multilaterals. It's the IMF. It's the World Bank. It's the development banks. The firepower there is very limited. It's not the Federal Reserve. It's not the, BOJ or the ECB. These institutions have constraints in how much they can deliver. So it's not entirely about misjudging the seriousness of what is needed, but also, having the capacity for well over 100 countries to deliver that kind of shot in the arm.
Carmen, just quickly, we caught up with David Rosenberg around about 40 minutes ago, and he wanted your view on how higher debt loads can constrain demand, constrain potential GDP. Carmen, can you speak to that for us, given how much debt we've just added to the global economy in the last 9 months? Have you started doing work on that?
Well, look, I've been doing a lot of work also on the issue, what I think is for the advanced economies, the more immediate issues, which I think have to do with private debt and financial fragility. This is what I alluded to. A big shot in the arm, a big source of stimulus. This time has also been forbearance, delaying payments for households and firms. When those programs expire, do those debts continue to be repaid? Mm-hmm. So the more for the advanced economies, as opposed to some of the lower income countries in some of the emerging markets, the more immediate issue is the private debt. And that is already, I think, especially for the corporate sector, the small and medium businesses, already a source of concern.
Vincent Reinhart, the final question to you to really look forward, maybe out of a pandemic depression, who knows what. What is your market forecast, your economic forecast, rather, call for Q1 and Q2 of next year? Advise the Biden administration this morning.
We keep slowing from where we have been. Obviously, you don't repeat a 33%. We have in the first quarter a bit of a soft patch, just 2% growth because of the absence of fiscal stimulus. And then on the assumption Washington, D.C. gets something together, then closer to 5% in the middle part of the year. What I really hope we get is something like the CARES Act of targeted and temporary and timely impetus rather than the American Recovery and Reinvestment Act of 2009, which was timely for sure, but it had a very long spend out rate. Now's not the time to do infrastructure. We need it over the longer haul, but right now we got to get income into the hands of people.
Guys, we've got to leave it there. Carmen, fantastic to hear from you. Carmen Reinhardt there, World Bank Chief Economist. And Vince, thank you, sir. Vincent Reinhardt of Standish Mellon Asset Management. Thank you very much. Tom Keene, I think it's pretty clear. The prospect for a policy error, it's really big right now, looking at the trajectory of things and where the policy conversation is right now in D.C.
This has been a great Monday conversation, not only the academics of Carmen Reinhardt and Vincent Reinhardt, but just the market economics, John, including the European data we saw out earlier this morning. I mean, we're here where we knew we would be, which is evidence of a slowdown, and it is just a clear and present reality.
Clear split, though, between manufacturing and services. That's clearly really evident in the European PMIs. Manufacturing better, services worse. Neil Dutterad on Twitter of Renaissance Macro Research, Tom, pointing out also the expectations component with a little bit of a lift in some of these PMIs too. Off the back of, guess what? The hope around a vaccine.
Yeah, I go again to the disinflation discussion with David Rosenberg and Alan Ruskin and John Farrow. That was simply if service sector ebbs here as it is, you get a disinflation in service sector inflation. Does that come back to, say, in the U.S., 3%, or are we finding a new reduced level? That's a huge guesstimate right now by the people we speak to.
Well, we got the Rosenberg guess about 40 minutes ago, didn't we, Lisa? And that was a downside surprise, and lower yields from here.
Well, and I just really want to reiterate this. We got actually the best weekly performance for treasuries last week since August. That comes as we get better and better vaccine news. And I do want to just come back to something both you, John, and Tom were talking about, which is this debt overhang. Deutsche Bank ran the numbers. We increased global debt by $20 trillion over the past year since the beginning of the pandemic. What does that do to long-term growth? We got to pay that back. $20 trillion. That, according to IIF data that Deutsche Bank put out, $277 trillion of global debt by the end of 2020. That, according to Deutsche Bank.
That number sounds absolutely insane. Lisa, fire that over. Alongside Tom Keene and Lisa Bravitz, I'm Jonathan Ferro, with some insane numbers about to drop into my inbox, apparently. For our audience worldwide.
This is just, we do research for John so he can get to his other properties.
We do it
That's all
live on air for me to use again in about 15 minutes. This is Bloomberg.
With the First Word News, I'm Ritika Gupta. Another vaccine has shown promise in the fight against the coronavirus. The shot developed by the University of Oxford and AstraZeneca prevented a majority of people from getting the disease. It stopped an average of 70% of participants from falling ill. That's less than vaccines from Pfizer and Moderna. However, effectiveness rose to 90% for one of two dosing regimes. One of President Trump's most loyal supporters says it's time for the president to move on. Blackstone Group CEO Steven Schwartzman says the outcome of the election is certain today, and he's ready to help President-elect Biden. United Airlines is expanding coronavirus testing for 10 locations served from Houston, amongst them Aruba, the Bahamas, and Lima, Peru. All the destinations require testing. Passengers will have the option to take a self-collected mail-in test that meets local entry requirements. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
This is such a critical moment for a smooth, normal transition process to happen. And what's happening right now is anything but normal.
I think this economy is at a precarious point.
Jared Bernstein, of course, key advisor to the president-elect on economics. I would really presume, I usually wouldn't say this, but I would presume that Dr. Bernstein would clearly be in for a position within the Biden administration. We'll see how that unfolds in the coming days. Right now, with breaking news and news flow, this from Dow Jones, where the Trump administration, they consider a pact against China economic coercion is someone steeped in the transitions of Washington. Michael McKee is our economics and policy correspondent, but from his moment working on the transition from Eisenhower to Kennedy, McKee has been very adept at understanding the back and forth of Washington. Michael McKee, the Trump administration seems to be aggressively affecting policy, economic and political policy, into the lame duck in this. Is that a surprise?
It's not a surprise. The president telegraphed that that's what would happen, but the process is a little bit more straightforward than it has been in the past. A lot of other administrations have tried to slip people into jobs and make some policy changes at the end of their term. The exception was George W. Bush when the Obama administration came in. He told his cabinet not to do anything. So it's not a surprise, but it does make it more difficult for the incoming president, especially if you go as far as Trump in trying to reverse policies.
Right. Michael McKee, separate executive orders holding up the book and doing what Mr. Trump does from State Department policy or Treasury policy. How does a Biden administration respond to executive orders versus what they would respond to cabinet level policy?
Well, executive orders can be reversed, and so that's not a real issue, and we know that the incoming Biden administration is preparing a whole host of reversals in that area. The biggest problem is in rulemaking in the various cabinet agencies, particularly in places like the Environmental Protection Agency, where they're trying to change not only the rules on some pollution levels, but on the rules on how you change the rules to make it more difficult to roll things back. So that's going to be the challenge for the administration. If they get the Senate, then the Democrats can use an obscure law that the Trump administration used at the beginning. It enables you to roll back last minute, within the last 90 days, rules that had been passed. But if they don't, then that's going to stay. Those are going to stay in place, and they will have to work to reverse them.
In the meantime, Mike, as there is this political drama unfolding in Washington, D.C., we still have this pandemic that's raging, and we do have, as both John and Tom have been pointing out, people losing their jobs, people not going to restaurants. We've seen this in the soft data and high-frequency data. Do you have a sense of how close we are to a double-dip recession based on the high-frequency data and the fact that the economic surprise index for the United States is the lowest since earlier this year, since June, when we had the real acceleration of the pandemic?
Well, we're getting closer to it, and at least one house, J.P. Morgan, has suggested a first quarter contraction. But most of Wall Street, if you look at something like the yield curve, has not priced something like that in yet. Yield curve's come down a little, flattened a little bit, but it's still well elevated over where it was at the beginning of the year. And the other aspect of it, Lisa, is that we lost so many jobs in the beginning and lost so much business in the beginning that now, even though things are shutting down again in some places, the damage isn't as great. So the economy is definitely slowing. It's a question of how far it goes and whether it does go into contraction, whether people feel they can hold on because of the good vaccine news, and again, whether we get some additional stimulus before Joe Biden takes office on January 20th. If we have to wait that long, then the odds increase that you might have some sort of contraction.
This is really important, Mike, because a lot of people came out several months ago saying we absolutely needed another round of a fiscal injection in order to support the economy. And here we are, and all of a sudden economists are saying, well, we were surprised. The balance sheet of most consumers seems to be better than we had expected, and there is more momentum in the economy. Based on all of the people that you speak with, do you think that the rethink right now in the economics field is that we don't necessarily need that big of a fiscal support package, and that more in line, perhaps, with the Republican skinny bill than it is at this point, the $2+ trillion Democrat bill? I
think most economists would be somewhere in between the two. The the Republicans in their $500 billion skinny bill don't put any money in for states and localities. And Democrats see that as very important, and a lot of economists do as well, because we've already seen a lot of layoffs in the state and local employment, and there will be more if they can't fill their budget holes by the end of the year. The other questions are on some of the things that are less important. Do you do something like suspending or eliminating student loans, that sort of thing? That's probably more optional. The basics of the package should be getting money to the people who are unemployed and helping out states and localities. They're also fighting over the legal liabilities question. The Republicans want, Democrats might be willing to compromise on that if they get a little bit more money.
Mike McKee, I assume this is like a 2-hour workday for you. I mean, through the week here, Thanksgiving week, and the Fed's really not too active as well. An open question, Mike. What are you going to study? What are you going to research as you stagger into December, and your question you're going to ask at the December 16th meeting?
Well, we're going to want to see
I'm moving my order to sell short for Japanese yen at 103.724. Okay?
Is a firm that specializes in analysis of pharmacology and analysis of health. And they're looking at the AstraZeneca language. And as you alluded to this morning, the word embellish has come up. I don't want to cast aspersions on anybody, but that headline, you think that'll echo through the day?
Well, look, their release was confusing, right? They had a 70% efficacy number, which raises a question. Why wasn't it 90, 95% like what we saw with Pfizer and Moderna? And then they had a second efficacy number of 90%. It was confusing, Tom. Confusing is bad in an era of so much disinformation and worry about vaccines.
Okay, position opened. Short position, Japanese yen, at 103.724.
Question is, how do you roll this out with enough doses? And given the fact that there is a 6-week spread to get immunity with 2 shots, getting everybody rounded up, and then your question, do you tattoo everybody on their foreheads if they actually get it, that they're clear?
Yeah, well, we'll have to see. I mean, we got to get the reports from Jeff Leerink and the team over at SVB Leerink to really understand the strong word embellish, but nevertheless, there it is, end of the day. We will drive forward that conversation as we do at Bloomberg. Not only the markets, we look at politics, and boy, have we recently looked at health and pharmacology. Ruud Dober will join us here on Bloomberg Television and Bloomberg Radio. We look forward to that this morning with AstraZeneca, of course, and their president. That will be a more than timely conversation in the 10 o'clock hour. Futures, well, up 20 earlier, up 14 right now. Dow futures up 124. I'm going to call it a churn with a lift to the market. One idea, Brent crude a 46 print, 45.58. Stay with us on Bloomberg Radio and Bloomberg Television.
Once it goes into this plant, it's heated up very quickly to 600 or so degrees. It basically carbonizes.
A sense of the real-time action, the 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
From London and New York for our audience worldwide, good morning, good morning. The countdown to the open starts right now with futures positive. We begin with the big issue, the virus versus the vaccine. Hospitalizations accelerating in the United States, new infections prompting even tighter restrictions across the country. Nevada casinos cutting capacity down to just 25%. LA shutting down its outdoor dining once again, limiting America's most populous county to delivery and pickup on the eve of Thanksgiving. The nation's top infectious disease expert, Dr. Fauci, urging Americans to stay diligent ahead of the holidays.
We're in a very, very difficult situation at all levels. So I would hope that the people who are pushing back on the recommendations for mitigation measures just look at the numbers.
But the numbers are improving for a vaccine as well. AstraZeneca becoming the third developer to report promising results this month alone. Optimism rising, the hopes of beginning vaccinations in less than 3 weeks.
On the 11th or on the 12th of December, hopefully, the first people will be immunized across the United States, across all states, in all the areas where the state departments of health will have told us where to deliver the vaccine.
Joining us now for more, Michael McKee, Bloomberg International economics and policy correspondent. Mike, that's the realistic expectation for how this rolls out. The question we've got to grapple with is how much damage do we do in between?
Yeah, that's the question, Don. How far do we go down in terms of the economy? How many more people are hospitalized? How many more people die by the time a vaccine is widely available? And the doctor there went on to say on that program that he thought it would be May or so before you get herd immunity, enough people getting the vaccines around the world. But that news helped today by the word that there are 3 now, AstraZeneca and Oxford, developing a vaccine that does meet the test for efficacy. It's a little bit less effective than the Moderna and Pfizer vaccines. About 70% is the average, but that's because they did it in 2 different ways. With 2 doses, it's 62% effective, but 1.5, 90%, very close to the Pfizer-Moderna level. And even though it doesn't match those 2 quite for efficacy, AstraZeneca expects to have more than 300 million doses ready to ship globally by the end of the first quarter of next year. That's more than the other 2. The other advantages they have, you can keep it at a refrigerator temperature. It doesn't have to be specially frozen. With more doses available sooner and much cheaper, $3 to $4 a shot. And the difference that makes is Pfizer's about 39, Moderna 32 to 37. There are a lot more shots going to be available, particularly around the world in developing countries. And you can see how many different countries have signed up to buy these vaccines already. The AstraZeneca one, much more popular around the world. That's the yellow line there than the other two vaccines because it is so much cheaper. And the idea that this comes to market is good news for the rest of the world. Shares of all the companies have been mixed. A lot of this news has been priced into the markets, but overall, relatively good news. Now, Regeneron Pharmaceuticals, one other note, their antibody cocktail, the one that President Trump got when he had COVID, has been approved for emergency use for treatment of early COVID-19 symptoms. So that is some more good news on the vaccine front this morning. And the question is, to go back to where you started, with 12.2 million cases now, how many more do we see before these vaccines are finally going into people's arms?
And what does that mean for this economy? Downside surprise on retail sales last week. Jobless claims going in the wrong direction. Mike, thank you. We'll touch base with you about 42 minutes' time when we get PMIs in the United States. The story for the market right now is we advance another cyclical tilt, another Monday, the same story. Talkbacker's Michael Purvis expecting the vaccine developments to serve more as a call option for markets, writing the following. It promises a bridge to the post-COVID world. If we're pivoting to an environment where economically sensitive stocks lead the market higher, then that rally is going to be more inherently volatile than the rally we've seen over the past several months. Michael Purvis joins us now for more. Mike, always great to catch up with you, sir. Just walk me through your thinking right now, then. It's another Monday morning with a cyclical tilt and some more good vaccine news.
Right. You know, we've had a couple of weeks now of unfolding vaccine news from a variety of fronts, and that's all great stuff on several levels there. In terms of how it impacts the markets, I think you have to take into stock a couple of things. One, you know, if you think about stimulus, you know, you have monetary stimulus, of course, and we've had a lot of fiscal stimulus and potentially more, and then you have sort of vaccine stimulus. But the vaccine stimulus acts in the markets, in my view, very differently than the fiscal stimulus does. Particularly the CARES Act, as your prior guest Vince Reithard was referring to. That would be, you know, that's what's really kind of needed right now, is highly targeted and immediate cash in the bank there. But you know, there's a couple of things. So fiscal stimulus, it puts cash in the bank of a corporation or an individual. Really, it sort of ensures the economic condition as we get on this bridge to a post-COVID world. The promise of a vaccine, and you know, I guess maybe they're beyond promises right now, right? But there's still, as your colleague Lisa was just referencing, there's a lot of vagaries inherent with how this thing gets rolled out. This is not, you know, like getting a measles shot, right? And so I think you have to expect that if you're buying the rotation here and you're buying the sort of economic recovery to a post-COVID world, that there will be a lot of economic news flow there. And so the nature of the rally, the nature of this rotation, if in fact we are rotating into values and cyclicals as the way to kind of lead the market higher from here, it's just an inherently more volatile process than the rally we've had since March, which is really about you know, overweight big cap tech. We've got fiscal stimulus in abundance. We've got the Fed, you know, clearly you know, putting its foot on the gas in a very deliberate way, right? And so it's a very different type of rally, and I think it's an inherently more. There's all sorts of vulnerabilities that come with that rotation.
So, Mike, let me jump in. Let's talk about the term structure of the VIX right now, the extent to which that's normalized over the last month, and the degree to which you think that's overdone. I mentioned this a couple of hours ago on Bloomberg TV and radio, that maybe the C word starts getting thrown around again, complacency. Mike, do you feel that too?
It's funny, you know, the VIX curve is starting to normalize. There's still a little bit of a kink in the January contract, which perhaps reflects the Georgia runoff on January 5th. It perhaps reflects, you know, some of these, you know, lingering questions about the transition of power at the White House. But, you know, it's funny, the VIX, for, you know, for all of its sort of begrudgingly a retracement back to a normal shaped curve and to a, you know, maybe we'll get down to the high teens at some point, mid-teens even. It's still much higher than any other VIX for European equities, any VIX for Japanese equities and emerging market equities there. So I think that's one thing I would say, that there's actually not as much I don't think there's a lot of complacency. Certainly as viewed from the options market lens right now, just because the VIX is coming in. Look, we've had an enormous rally. We have major U.S. indices up substantially across the year. We've got a lot of improving sort of equity market internals. And yet this rally has been a hedged rally. You saw that with the NASDAQ, when the NASDAQ was going crazy in August and September. You saw a lot of open interest on NDX and its ilk put options and so forth. It wasn't all about just Tesla, but retail buying Tesla calls. And you've seen that. I think it's a healthy sign that we're rallying with a stubbornly high VIX here. So I think that's. I'm not so worried about the complacency from that end. What I do worry about, John, though, is that when you think about this big rotation and that we're going to go into this, oh my God, these stocks that have been underperformers are so cheap. I think you have to be very thoughtful there, because like Bank of America, for example, is trading at 13 times forward earnings. That's a pretty major discount to the S&P. You can make a pretty good case that the downside there is not too bad. But if you look at the Russell 2000, for example, that's the relative valuation of the Russell 2000 to the S&P 500 is extraordinarily rich. And if you look at its 2-year forward multiple, it's as high as it's ever been there. So if you're rotating out of your Amazon to buy a basket of small cap stocks, just realize it's not necessarily, it's not really a value play. It's a rotation, but it's not a value play. So
well, Mike, you can see where the debate is right now, though. It's just about being long and where you're long. It's either you're long the small caps, you're long big tech, you bar the two. I hardly speak to anyone that's thinking about downside through the back end of this year and into early Q1. A little bit later, I'll talk about the economy. JP Morgan looking for a soft Q1. I understand the conditioning here that we went through spring and we saw a major lockdown for most of the global economy in this market rally. And I think many people have been conditioned by that experience and do not want to sell, do not want to pare down risk on the prospect of vaccinations beginning in just a couple of weeks' time, Mike. And I'm trying to grapple with the idea of what would break that investor conditioning. Mike, what would do that?
Well, look, I mean, I think, look, I'm one of those bulls. I'm at 36.50 for year end. I actually think big cap tech is going to help pave the path forwards into the year end and probably through the winter here. But I think the prospects are really sort of choppy. I think the biggest threat right now to the overall equity market support is something coming from Powell and the Fed there. One thing that's really interesting is that, since the Pfizer news hit 2 Mondays ago, break-evens have been sideways. They're not being lifted up by the vaccine call. The euro-dollar curve out to 2022, 23, 24, that jumped for 2 days, and then it's kind of retraced all of that, right? So the bond market is not necessarily really, it's not really selling off here, right? In some of the facets of that treasury market are not selling off. So if that were to change, and that's probably comes down to really Powell and the Fed, really changing, having a different response mechanism to a vaccine, and that being articulated, that would upset the apple cart. Right now, let's get back to where this party started back in March, was the Fed is forcing us, it's been forcing a weak dollar, and they're there to stabilize treasury yields and the volatility of those yields, and that means they're pushing you into risk assets, and then it's sort of a little bit of a horse race at any given day as to which risk assets you want to be long. But
see that weak dollar this morning as well, Mike, for sure. That weak dollar in this market in a big way in G10. Mike, we've got to leave it there. Michael Purvis there of Toolbank. And Mike, always great to get your thoughts on this market. Our performance pretty clear this morning. It's in the Russell, it's in the small caps, up by about 0.8%. The underperformance coming from the NASDAQ. Big tech going into the open. Let's get to the market desk and get you some movers. Here's Abigail.
Well, John, it is Monday in the month of November. More likely than not, that means we have a cyclical rally. So it is on vaccine news. But today's news is a little bit confusing. And as a result, AstraZeneca, the company releasing news, 70% average efficacy for their vaccine around COVID-19. COVID-19, less than Pfizer's and Moderna's vaccine. For AstraZeneca, 2 doses is 62% efficacy, a dose and a half is 90%. So you see that stock down. On the other hand, Moderna, they again have almost 95% efficacy. They're expected to file for emergency authorization soon. Pfizer has already done that, so we have green for both of those stocks. And Regeneron, their antibody cocktail for early signs against COVID-19 has been approved on an emergency basis by the FDA, so we see that stock sharply higher.
Abigail, thank you. Coming up on this program, the next White House slowly taking shape. President-elect Joe Biden preparing to announce the first members of his cabinet. That conversation up next with Eric Stein of Eaton Vance. From London and New York this morning, good morning. 18 minutes away from the opening bell. Futures positive. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan. We did see some pressure on the futures. That is now being reversed.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
You're going to see the first of the president-elect's cabinet appointments on Tuesday of this week, meeting the pace that was set by the Obama-Biden transition, beating the pace set by the Trump transition.
President-elect Joe Biden moving forward with transition plans, with President Trump still refusing to concede. Biden expected to name longtime advisor Tony Blinken as Secretary of State. Blinken, a vocal critic of the Trump administration, telling Bloomberg earlier this year, our administration has left the leadership vacuum around that China is only too happy to fill. Even in the WHO, which for all its problems and need for reform is nonetheless an important organization, we've abandoned it. Kevin Cirilli, Bloomberg Chief Washington Correspondent, joins us now for more. Kevin, slowly taking shape. When do you expect to hear the names officially?
Officially tomorrow. I just spoke with a source who reiterated that tomorrow that timetable going to happen with regards to cabinet officials. You mentioned Tony Blinken for Secretary of State, as it's now been widely reported. Here's someone who has a long history with now President-elect Joe Biden. And when I spoke with him just several months ago over the summer, what he really outlined in terms of the U.S.-China relationship, not just from a U.S.-China perspective, but really a techno-democracy versus techno-autocracies. And that's really going to be the basis of geopolitical tensions for the next several years, especially as President-elect Biden gets ready to take over. It's not just Tony Blinken that we're hearing being named to the cabinet, but also Linda Thomas Greenfield, former Assistant Secretary for African Affairs. She could be the UN ambassador. This would be the first woman woman of color that is named in the Biden administration in a public face. And Jake Sullivan, likely for the National Security Advisor. He's the former National Security Advisor for Vice President Biden as well. Of course, everybody trying to figure out who will get Treasury Secretary. Janet Yellen, former Fed chairwoman. Roger Ferguson, another name that we're hearing. And of course, Lael Brainard. And the expectation, truly, Jonathan, here inside of the Beltway, based upon conversations I've been having over the past couple of weeks, is that Lael Brainard is a front runner to get that job.
Chair Yellen in the mix as well. Could Chair Yellen become Secretary Yellen? Kevin, great to see you, sir. Be well.
Thank you.
Kevin Cerulli, down in Washington, D.C. Thank you. Eden Vance's Eric Stein paying close attention to one cabinet position in particular, a view I'm sure you all share. The most important thing I'm watching is who will be the Treasury Secretary under President Biden. He said he's going to try to please all constituencies of the Democratic Party, and that may be very tough to do. Eric joins us now for more. Eric, let's talk about that then. The cabinet positions, are they key to your outlook in any way, shape or form?
Yeah, no, first off, Jonathan, thanks for having me on. I think there's a lot of constituencies, as I said in my note to you, on the Democratic Party from the center left to the very progressive left. And so trying to please all those will be difficult for President-elect Biden. But I think Treasury Secretary not only matters because who that person is and the policy they're going to have to undertake, but also just the signal to markets of what is the economic philosophy, the economic policy of the Biden administration going to be.
The outlook for next year, a lot of people plugging that in to a weaker dollar. The belief that the predictable policy outcome that we could get from a Biden cabinet could mean you get this weaker dollar, this more constructive view for the rest of the world. Let's be clear, that's the move of the morning, Eric. Dollar index, DXY, taking out the late August low in this market this morning. Euro dollar through 119 briefly. Is that a view you share?
Yes, I think we are in for a period of a weaker dollar. I think we're in a period with with Biden of more multilateralism, more coming together. Not that everyone's going to agree on everything, but I think that kind of geopolitical stability coming from the U.S. Probably better for global coordination, better for at least parts of global growth. And you should see a weaker dollar. Also, if things cyclically pick up in the economy, which I think we're going to see, assuming we have vaccines, widespread herd immunity by some point in the first half of next year.
And Eric, whenever anyone talks about a vaccine, synchronized global growth, the return of the status quo, they throw around the word normal. I've been trying to understand what normal actually means, what the post-COVID world looks like when we say normal. In a bond market that yields about 85 to 90 basis points on a 10-year Treasury yield over any given day in the last week, is that normal? Is that the new normal that we might have to live with even with a vaccine?
Yeah, who knows if it's a new normal? It's at least something like the new normal. I do think, and previous guests were talking a little bit about Fed policy. I think where Fed policy is going to really be impactful is if they try this average inflation targeting concept and continue with it as we see a cyclical recovery, hopefully see a cyclical recovery into 2021. Post a vaccine, markets start to take off, and the Fed said, look, we're going to keep real interest rates low. We want higher growth. We want higher inflation. Then maybe you see a sell-off at the back end of the bond market, but the Fed trying to pull down the front end. So probably not normal, but I think that's the Fed's policy MO from here.
Isn't that fuel for the growth trade in the equity market, Eric?
Is that enough for the growth trade in the equity? I mean, you'll probably see a rotation.
Is that fuel for big tech? Just given the story that we've seen in the last few months where real rates and low real rates have been at the epicenter of the valuation story around big tech. If that's the Fed's game here, does that keep you on the road to having a constructive view on that part of the market?
Yeah, so look, certainly a big part of the rally that we've seen in big tech is not only people work from home and using Zoom and things like that, it's also these low interest rates, which is not only the Fed, it's market forces. But if we do see a cyclical recovery, it'll probably be more of a rotating equity market into value stocks, into emerging markets, into non-U.S. stocks, and away from some of that big tech. But as long as rates stay low, for sure, that's going to help assets where most of the value is in the future as opposed to closer to the present.
And rates are staying low. It reminds me of the Soros quote, or at least I paraphrase, that markets can shape the events they anticipate. And in the credit market, that really is true. In credit, Eric, that is so self-fulfilling that if investors believe the future is good and keep credit bid, then the future might well be good because credit is bid and that keeps the optimism of the C-suite buoyant. It keeps financial conditions loose. And last week on Friday, To see that Carnival offering come to market the way it did, to see Inspire Brands come to the loan market the way it did, Eric, does that keep you in a constructive mood when you see the primary market doing so well?
Yes, no, I think that's a great question. That, you know, credit markets, there is some reflexivity, to use a term that George Soros uses, that if people are positive and investors think companies can pay back their debt, that means rates will be low, and if rates are low, it makes it easier for them to pay back their debt. Obviously, you know, lots of discussion last week with the Fed's, you know, some of the 13-3 programs coming to an end with the announcement from Secretary Mnuchin. So lots of discussion among people on that. But generally speaking, where spreads are, where absolute yields are even lower, just because the low base rates that we were just talking about, that makes credit conditions easier for everything.
Eric, always great to hear from you, sir, especially on fixed income. Eric Stein there on this market at the moment, and the potential that we get a Chair Yellen becoming a Secretary Yellen, the future of the cabinet and the future government taking shape. Might hear more on that in the next 24 hours or so on various positions in this administration for the next 4 years. Coming up on this programme, the analyst action you need to know. That'll be next in our morning calls, and later, Barry Knapp of Ironsides joining us at the opening bell, weighing in on the great rotation that we've seen into small caps. That conversation's still ahead. This is Bloomberg.
Können Sie einmal noch ganz kurz zu uns kommen? Ganz kurz.
Davor stellen.
About 5 minutes away from the opening bell, we're taking shape as follows. An equity market pushing higher, small caps outperforming, big tech underperforming. How many times we said that on a Monday over the last couple of weeks? 3 Mondays running, 3 straight Mondays. Vaccine optimism driving this market. Let's get you some morning calls. A look at some of the analyst recommendations this morning on Wall Street. We begin first up with JP Morgan upgrading the gap to overweight with a $30 price target. The analysts seeing a favourable environment next year, with the retailer benefiting from other store closures and disruptions. Your second call from Credit Suisse, downgrading Kellogg to neutral, $68 price target. The analyst expecting management to provide disappointing guidance next year with tough comps in North America and Mexico. And your third and final call, it comes from Piper Sandler, downgrading Foot Locker to underweight, $25 price target. The analysts seeing muted near-term visibility with COVID cases accelerating into year-end. Coming up on that topic, vaccine optimism fueling the great rotation into small caps over the last several weeks. That conversation up next with Barry Knapp of Ironsides. The opening bell just around the corner. This is Bloomberg.
understand the sensitivities of the other.
Former U.S. Secretary of State Henry Kissinger said the incoming Biden administration should move quickly to restore lines of communication with China that frayed during the Trump years, or risk a crisis that could escalate into military conflict.
Unless there is some basis for some cooperative action, the world will slide into a catastrophe comparable to World War I, with a technology that is even more difficult to control than the technology of the period then.
Their CPG history, their experience, and really how we might be able to combine together to really create this fantastic public company. And so we kind of got into the SPAC thing a little bit before it became such a hot method of going public.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
How's this for a line from Morgan Stanley? With equity markets back to resistance, another correction has likely begun with a classic Southern News reaction to the vaccines. Looking for an equity market pullback, maybe even testing the low end of their range of 31.50 to 35.50 just one more time. Something to think about. The opening bell as we push higher again, up 18 on S&P 500 futures, up 0.5%. A clear outperformance in the Russell small caps with a nice bid once again to kick off another Monday morning. Switch up the board in the bond market. Treasury yields bleeding higher. Treasuries lower, softer. We head north on a yield by 2 basis points to 0.8455%. And we bookend Treasuries with the FX market and the commodity market at some key levels at the moment. The DXY testing the lows that we saw at the back end of August, and crude testing the highs that we saw at the back end of August. Those two things worth a look at the close a little bit later. That's the cross-asset price action. Let's get you some movers at the market desk. Back with us, here's Abigail.
Well, John, it is Monday. We have vaccine news, and that means that we have the cyclical rally that you were so nicely outlining there between the difference with the Russell 2000 rallying and the NASDAQ underperforming. As for the healthcare movers, let's start out with the company with the news, AstraZeneca. These shares are actually down because the news is a little bit confusing. The overall average efficacy for their COVID-19 vaccine is 70%. That is less than what Pfizer has at 95% and what Moderna has at 94.5%. Pfizer, of course, is already filed for emergency authorization. The vaccine could be available on December 11th. Moderna is thought to be doing that soon. So the shares of AstraZeneca are down. Pfizer and Moderna, on the other hand, are higher, while Regeneron is popping on the news that its COVID antibody cocktail has been approved for emergency use by the FDA. As for that cyclical rally, we, of course, have the airlines and cruise line operators trading higher on the hope or the thought that folks will be out there traveling soon and perhaps with speed. And then we have JP Morgan up about 1.4%, and then there's ExxonMobil up 1.3%. Financials and energy doing well. Of course, financials being helped out as the yield curve steepens, but if the economy normalizes, that, of course, will be good for the banks and for the energy companies, too, as demand stabilizes for oil, John.
It is all pretty intuitive this morning, Abigail. Thank you. 2 minutes into the session, we advanced 0.6% on the S&P 500. Top of the pile, energy, financials, industrials. Leading the way, of course, as Abigail points out, some of the banks doing nicely, steeper curve and all that, and the commodity market threatening to take out the post-COVID shock highs in crude means energy is up another 1.7%. That's the story for the equity market in the United States. Small caps just continuing their outperformance, heading for their best month since February, doubling the gains within the NASDAQ thus far. JP Morgan's Jack Caffrey weighing in on the rotation.
Moving towards equal weight makes some sense. Moving towards small cap makes some sense. I think also just at the stock level, we're finding opportunities in the industrials. We're finding some interesting opportunities in the material sector. probably turns to a bit more of a stock picker's market rather than just the stock market overall.
Joining us on this theme, Bloomberg's Ed Ludlow out of San Francisco. Good morning to you, Ed.
Yeah, good morning, John. If Jack Caffrey raises a question, it's whether this broad array move into rotation into value, into small caps will be self-sustaining, or if investors will get left flat-footed, right? Come with me into my Bloomberg and look at this chart. You can see so far in the month of November, we've seen real outperformance in the Russell 2000 index, and it's set to have its best month relative to the S&P 500 since 2016. You factor in the strength that we saw in the Russell 2000 in October, then small caps look like they're on track to have their best quarter relative to the S&P 500 in almost 30 years. But we know that investors have been challenged by this juggling act, right? Is it optimism around a vaccine ending the pandemic, reopening the economy broadly, or is it more in the short term that we will feel economic pain as we face the logistics of having to roll out a vaccine like that? In terms of what we're seeing, 2 successive weeks of gains in the Russell 2000 index versus 2 successive weekly declines for the NASDAQ 100. But big tech's demise is no sure bet, John. If you look at the funds that have done well this year, they've been heavily tilted towards names like Facebook, Apple, Amazon, Microsoft. On days we've seen investors more focused on new virus count cases, they've gone back into those names, the so-called stay-at-home trades. And if you think about the evidence that we saw last week, Wednesday, Thursday, the NASDAQ 100 outperformed the Russell 2000 and the S&P 500. In terms of industry groups that are doing well on the Russell 2000, yes, it's names like energy groups, it's names like real estate as well, but tech is still there and it's doing well. And it's worth remembering amid this rotation, John, that the NASDAQ indexes are having their best November for a very, very long time.
Ed Ludlow from San Fran on the latest price action. Ed, thank you. 3-4 minutes into the session, we advanced 0.6% on the S&P. The underperformance clearly from the NASDAQ versus the Russell. The NASDAQ up by about 0.6%. The Russell still doing nicely. Ironside Barry Knapp avoiding the reopening versus lockdown trade debate. He writes the following, quote, "We have a cyclical bias to our sector weights. Our strongest conviction themes are a robust recovery in global trade and manufacturing." Barry joins us now for more. Barry, fantastic to catch up with you, sir. Can you just walk me through that distinction again?
Sure. So this outperformance of industrials relative to tech, it didn't just begin. It actually began at the beginning of July from the redundant school of redundancy. But it really began when the second wave in the Sunbelt sector peaked. And there really are 3 significant trends that I think are going to persist through 2021 that will override opening versus work from home,